up in our houses right here. You know what's great about this whole job? You could do this from home. You could finally do this from home. It's not a big deal, and it's okay. You know, we've been locked up for my whole staff. We closed down our office actually the beginning of March, and I think hopefully I'm corona free. But listen, just make sure you guys are paying attention, and we have to kind of get rid of this whole virus thing. But the good thing about it is that us going out there and trading the market, this has been, I mean, I've been waiting for this since 2008. I mean, unfortunately, I hate catastrophes personally, but as a trader, is what we really look for. And that's really been helping us out a lot. So that's the main goal. So, but anyway, we got a lot of great presenters here today. They're going to be presenting. We do the Cyber Expo every month. We bring you some of the best masterminds in today's industry. And we want you to understand that, you know, to be a good trader, you got to learn, you got to have a mentor. And, you know, for me, listen, I'm a day trader. We have some swing traders here. We got options. We have Forex. You got to learn a little bit of everything. And you might have to listen to 2-3 people regarding it's good in that industry. And you know what? You have to find what you like and what attracts you. And you got to sample a little bit of everybody's stuff. And then you need to go from there. But listen, the reason why you're here is you need to see if trading's for you and ready to take that one big leap of faith, as in making an investment in your education, because the education is the cheapest trade you're ever going to make. So with that said, let me bring my first presenter in here, Steve Brooks. Now, Steve Brooks has been around for a long, long time, and he's going to really cover, he's going to talk for about 50 minutes, and then we'll bring in Boyer. Bo's going to come in right after him. So you give the opportunity to register for anything he's going to be giving you. And like I told you, everyone here is going to be offering you some good, some very inexpensive, really good products. And like I said, you want them, you want them. You don't, try something, but definitely, you know, go out there and make that effort to kind of, you know, do something, because we can't teach you how to trade in an hour. Okay. But he's going to talk about a couple of things right here. He's going to focus specifically on how you could supplement your income with just a very zero experience. And that obviously does help out a lot, having zero experience, because you don't have any bad habits. And also, he's going to talk about 2 of his best strategies to kind of change your life, what he uses very well. And then what I'm really looking forward to is his last thing he's going to talk about is, you know, how to scale up your investment without risking that much to make a good monthly income. And once again, we're all looking good for that. So with that said, let me just pass it over to Steve. Steve, you know, let me just see. Steve, could you hear us okay?
I can hear you guys. Can you guys hear me?
No problem. All right, guys.
Good.
So once again, the chat is open. We'll try to answer as much as we can with the chat and kind of help out with everyone. But you know, try to keep your chats to the minimum. And like I said, if there's something specific, kind of talk about what we're talking on. So anyway, let me pass it off to Steve. Steve Brooks, the stage is all yours. Welcome.
Thank you. All right, folks, let's go ahead and share this screen here. Folks, for the moderators, can someone just let me know if my screen is very visible and you could all hear my voice? Just for the moderators of the event. Hello? Okay, we'll go ahead.
Everything's fine. We hear you. We see everything. We hear you fine, Steve. It's all yours.
Okay, thank you. All right, everyone, welcome to the training. We do only have about 55 minutes here, so I'm going to have to jump right in. But here's the really cool thing, folks. In that next 55 minutes, not only am I going to show you exactly how I beat the market last year in 2019, investing just 1 day a week, but how I'm using those exact same strategies again this year in 2020 to have even better results. So how I beat the market in 2019, investing just 1 day a week. So here's what we're going to learn during this training. First of all, folks, you're going to learn, as you know, how to beat the market investing just 1 day a week. But of course, you already knew that, right? You're also going to learn how the top 1% of all investors are able to make money each and every year. And trust me, folks, that is something you can do as well. Now, on this training, I'm going to show you how to profit while completely bypassing having to know about charts, balance sheets, Fibonacci's, candlesticks, Ichimoku clouds. For what I am teaching you on this training, folks, you do not need to know any of that. And finally, I'm going to show you how you can scale up your investments and put it on semi-autopilot. Now, my big promise to you for being on this training with me right now is, first of all, you're going to have a blast. This is a ton of fun, and I absolutely love teaching individual investors and traders how to be much more consistent with their results. So if you are new to investing and you pay attention for the entirety of this training, I promise not only will you feel the stock market is way simpler than you thought, but you'll be able to start making your first profits immediately following this training. Now, I know we also have folks on this training who are not new to this game. So if you too pay attention for the entirety of this training, I promise you'll be able to add these methods to your already arsenal of ideas. But why is this important, folks? Why is this important? Well, if I give you one idea today, just one solid idea, it could very well change your financial future, because the reality is you are just one trade away from financial freedom. And I hope to be able to share that with you right here and right now. But first, I have to know if you're in the right place. So if you are new to the stock market and you want to jumpstart your success, well, then this is for you. If you are an experienced investor looking for a big time income boost, then this is for you too. If you want to supplement or replace your income, or if you are looking to achieve financial freedom, then you are in the right spot. And finally, if you need a specific step-by-step plan and want to avoid learning it on your own, then this is for you. This is something anyone can do, even very part-time. Now, guys and gals, I hope you're starting to feel like you're in the right place. If you are in the right place, let me know in the chat box by giving me a big fat 44 right now. I want to make this as interactive as possible, so please give me a 44 in the chat box if some of these sound pretty dang good to you. Fantastic. We got a lot of folks who are in the right place. Let's move on here. So my goal for this training is to make this training worth at least $5,000 to your investments. Let's repeat that one more time, folks. My goal for this training is to make this training worth at least $5,000 to your investments. And these are the exact same strategies that I use and I share with my students, and they work. So there's no doubt in my mind you're going to get that kind of value if you commit with me. So my ask is that you treat this training as if you paid $5,000 to learn this. And what this really means is, look, I know right here, right now, you have every opportunity in the world to be distracted away from what we're covering right here, right now. But if you want that $5,000 of value free, you have to pay attention and stay all the way until the end of this training. And speaking of that, full transparency, I don't want anyone to have any anxiety about what might happen at the end of the training. We do have a community called Market Hero that will extend an exclusive invitation to you for being a part of this training meeting today. But you should know that if you want to join later on, there's going to be a ton of incentives and a giant discount, which I want to go over very, very quickly. So again, Market Hero, folks, everything you need to make money and save time doing so in the stock market. Now, folks, this is the single biggest theme for the training that you are on right now. Make more money and spending a lot less time doing so. You're also going to get exclusive access to our private Facebook group and weekly live webinar trainings. Now, on my website, Market Hero currently retails for $5,000. But as I said before, because you're here with me today, there's going to be a ton of incentives and a giant discount. So the decision will be completely up to you at the end, but I just wanted to be 100% transparent so you could focus on the training and not worry about what comes next. And again, I promise you that if you pay attention, you're going to get that $5,000 of value out of this training free. Does that sound like a fair deal to you? Very good, folks. So how's this training going to work? Well, first of all, I'm going to tell you just a little bit about who I am, maybe 30 seconds or so worth. Then you're going to hear from a few of my clients and students, and you're going to learn what they did to crush it in the market. Now, here's the deal. Our most successful trainees, folks, have been our most active trainees. So feel free to ask away. So the way we're going to do that is we're actually going to pause a few times during the actual training to answer some of the questions that are pertinent to what we're talking about at that point in time. And if we don't get to every single one of your questions during the training, we'll try to stay on at the end as long as we can to make sure as many questions as we can get answered. So who's this Stephen Brooks character who's been going on for the last handful of minutes? Well, yes, folks, that is me in the top right corner of the screen. I am a former professional baseball player, and I did play in the Kansas City Royals organization. Now, that was a former life. Since then, I've made over $1.5 million of profits in the stock market. I'm currently an investor coach for clients all over the world who have combined $27 million under management. I'm also a traveler and a sports fanatic and a foodie. Now, what makes this presentation different, folks, than all the other ones you've been on before and all the other ones you will be on in the future? Well, we are not going to be talking about charts or balance sheets or the Fibonacci or candlesticks or trend lines. We're not going to be talking about any of that whatsoever. Everything that I teach you can be implemented immediately by a beginner or expert. And the way we do that is we focus on these unsexy or less risky methods that have worked for years, and as you all will see, are backed by years and years of data. And it's totally cool that I teach you all this because, as we all know, the stock market is a multi-trillion-dollar industry, so there are enough profits to go around for everyone. Now, the lawyers write the slide. You guys know the drill, right? This is not a get-rich-quick type of thing. If you're here today investing your time in your financial education, I know that you already understand that. This is not effortless earnings, folks. You will need to pay attention during this training. You will need to ask questions when you have them. You will need to take notes, and you will need to take action on these methods following this training. But just because my methods are less risky does not mean that they are risk-free. And finally, folks, my results are not typical. However, I will walk you through the methods that I'm using to get excellent results. Please, again, folks, understand that my results are not typical. And as always, there is real risk in trading stocks, futures, options, cryptocurrencies, real estate, baseball cards. While investing does have a potential for very large rewards, there is also real potential for risk. Absolutely consult your registered financial advisor before placing any trades or investments. So, the pleasantries are over now, folks. We are now into the meat and potatoes of the presentation. So if you did not have a paper and a pen up before, you'll want to go ahead and do it now. On this training, you will be taught 2 setups. Well, what is a setup, Stephen? Well, imagine you're sitting in your car and you're at a red light. You're not going anywhere, but all of a sudden the light flashes green. That is the setup. And what happens when the light flashes green or the setup reveals itself to us? Well, we just go ahead and drive on through the intersection. That is exactly how simple my top 2 trading methods are. And as you can see, folks, this is really short by design because we're taking all the hype and all the fluff and we are completely removing it. This is really an instructional training with pure value, and it's kind of how simple my system is. Now, folks, before we go ahead and get started, I want you to know these methods, they work hands down. So I need you all to promise you something, folks. I need you all to promise me that after I share my top 2 trading secrets with you, that you'll go out there and take action on them immediately following this training. So give me a 55 in the chat box, folks, if you promise to take action on my top 2 trading methods immediately following this training. Let me see those 55s, folks. Let me see who my action takers are on this training. Fantastic, fantastic, fantastic. So let's dive right into setup number 1, folks, and I called this the weekly setup. Now, folks, here is a current student of mine by the name of Ginger. Now, folks, I met Ginger about a year ago. Back in December of 2018, she came to one of my trainings because she was looking to learn how to be much more consistent with her trading results. She was getting closer and closer to retirement and was looking for an additional income stream in retirement. So again, she came to the training back in December of 2018, and we taught her this weekly setup, which is the exact same method I'm going to share with all of you in about 2 minutes time. Last year in 2019, she went out there and all she did was this weekly setup. Now, I touched base with her recently. I said, hey, Ginger, exactly how did you do last year following my weekly setup? And she said, in 2019, my second trading year ever, I have made money every single month by following your weekly trade. This trade has allowed me to be way more consistent than I have ever been. Now, after she said that to me, folks, I said, hey, Ginger, would it be okay if you sent me over your online brokerage statement so I could run the numbers myself and see exactly how you did following my weekly trade? And she said, of course, Stephen, not a problem. And as it turns out, folks, Ginger actually had a 114% return on her entire portfolio in 2019. In fact, give me a 114 in the chat box if you would have loved to have had a 114% return on your entire portfolio in 2019, just like Ginger did. Of course, I see all those 114s because that is a phenomenal return. So the next question is, well, how did she do it? So here's the deal. When breaking down stock market returns, it turns out that there are days of the week which are consistently profitable. In order to locate this profitable setup, we must figure out what days they are. And folks, the good news for you is we have. So in breaking down the profit and loss by day in the overall stock market, folks, we have found a winner. Now, what are we looking at here on the left-hand side of the screen? We are looking at S&P 500 returns from 2000 to the beginning of 2020. So we're looking at 2 decades worth of data here. Now, the black line, the S&P 500, what is that? That is an index. That is a basket of 500 US-based stocks from many different sectors. So it is a very good overall summary of the stock market. And again, that is the black line going from 2000 to the beginning of 2020. And then as we can all see, we have broken it down by each individual day of the week. So we have Tuesday in red, we have Thursday in blue, we have Monday in green, if we have Wednesday in green, we have Monday in gray, and we have Friday in gold. folks, it's very clear to me, and I know it's clear to you too, that since 2000, so again, we're talking 20 years, folks, investing on Tuesdays only would have resulted in an investor beating the returns of the stock market. Okay, so that is the setup. So how do we take advantage of that? So here's what we're going to do. Before the stock market closes on Monday. Now, the stock market closes at 4 p.m. Eastern time. So before that happens, we're going to log into any online brokerage account. We're going to type in these three letters, SPY, and we're going to click those big green buttons to buy as many shares of that stock as we can. That's how we get in. Okay, folks, how do we get out? Well, before the stock market closes on Tuesday, we're going to log back into our online brokerage account. We're going to type in those three letters again, but this time, folks, we're going to click those big red buttons to sell all the shares that we bought the day before. Let's repeat that one more time, folks. At the end of the day on Monday, we're going to do what? We're going to buy. And then at the end of the day on Tuesday, we're going to do what? We're going to sell. And since this single strategy, folks, has beaten the market over the last 20 years, we're going to repeat this, right? So we're going to set up these weekly reminders on our phones, on our calendars. We're going to add sticky notes to our computers. But let me ask you a question right now, folks, beginner or pro. Can you do the weekly setup, right? Can you log in on a Monday? Can you type in three letters and can you buy? And on Tuesday, can you sell? Because if you had followed that strategy since 2000, you would have beaten the returns of the market by investing just 1 day a week. Now in the chat box, I see a few folks asking me how this strategy worked in the last bear market. Well, take a look at the screen, folks, right now, and specifically focus on the black line, the S&P 500 during the financial crisis of 2008 and 2009. And as we can see, as the overall market was selling off and selling off very hard during the financial crisis, take a look at that red line. Take a look at Tuesday, was profiting at will during the financial crisis. But that is not all, folks. That is not all. Last year, the weekly setup was a very, very consistent strategy. 37 out of the 48 times we were able to execute it was a profitable trade for about a 77% win rate. And yes, last year, you could have went out there and just bought stock and beaten the returns of the market. However, last year, if you bought calls utilizing my weekly setup, you would have had a 214% return on your entire portfolio. If you bought call spreads, a 153% return, again, on your entire portfolio. If you sold puts, 88%, or if you sold put spreads, 124% return on your entire portfolio. And of course, these are very impressive results from last year, but what about this year? 2020 is not the same type of trading environment that we saw last year. Well, what about this very week? On Tuesday, April 14th, the S&P 500 was higher 84.43 points. And just this very week, on my weekly setup on buying calls, $100 turned into $371. $500 turned into $1,885. This week on buying call spreads, $100 turned into $200. $500 turned into $1,000. And as you could have expected, my members of Market Hero did even better. This Tuesday, one of my members by the name of Rona wrote me a note. She said the weekly setup was my first trade I took as a member of Market Hero and made $2,490 on it. So simple and so easy to do. That extra cash is going to help my family out big time during these challenging times. Or what about Antu? He also wrote me a note this Tuesday, folks, and he said, follow the trade exactly as you instructed for the past 4 weeks in a row. And I'm now up $6,330 on just those trades, with about 2,000 of that coming from today's trade. I have never before been able to withdraw profits from my trading account, but just this trade alone has allowed me to actually supplement my income. Amazing, folks. So that is the weekly setup. If you have any questions specifically on that weekly setup, go ahead and pop them into the chat box. I'm just going to take a little bit of a swig of water, and then I'll come back and answer as many questions as I can before moving on to the next bit of content. So type in those questions if you have them specifically on this weekly setup, folks. Which expiration are you talking about here, Stephen? Sure. So again, if we're going to do an options trade, and again, the weekly setup as you see it before you is stocks or options, up to you. You want to do it in the expiration cycle, which expires closest to the end of the trade. For us, that would be that Wednesday expiration. Next question, Stephen, how do I find a chart like this on the internet? So it's unlikely that you're ever going to be able to find a chart like this publicly available on the internet. I have it because I purchase the data every single month from the exchanges, and then I'm able to pass it off to my data team of data engineers who are crunching these numbers kind of all day, every day. So I own the data, I pass it to them, and then we're able to do whatever we please with that data. So we're able to come up with stuff that looks just like this. But unfortunately, I've never seen anything like this publicly available, if you will. Stephen, can we do this with QQQ? So the question is, can we do the weekly setup with the NASDAQ index ETF, our technology and our biotech companies? What I'll say is I have that information for my members of Market Hero, but I don't have that in front of me right now. And I don't want to give you anything that is not 100% accurate. So again, I don't have that information in front of me, but what I will say is the NASDAQ, the Dow, they all move very similar to the S&P 500. So the results for those are not wildly different than what you see before you here. Very cool. Stephen, I have noticed that Tuesday has been a really good day for the last couple months. Thanks so much for clarifying for me. Very cool. Very, very cool. Now, some of those folks who were asking those questions that we have not answered yet, just because we only have about 35 minutes left in this presentation, we're going to move on to the next bit of content here, but don't worry, we'll try to get through this so that we can do a much longer Q&A at the end and try to get as many questions as we possibly can get answered. But that was that weekly setup, and that was Q&A part 1. Now we're talking about setup number 2, folks, and I call this the trend setup. Now, here is a current student of mine by the name of Bob, folks. Now, folks, I met Bob years ago, like 7, 8, 9, maybe even 10 years ago at this point, through a former baseball players alumni network. And Bob was interested in learning how to make money in the market as a ways to supplement his income, because as a mechanic, he had not gotten an increase in his salary in over 10 years' time. And as you can see, folks, he wanted to learn how to do it, but he did not know if he had enough time to devote to it. So, hey, Bob, you know what? Why don't we work for like an hour together on a weekend, totally free? I'll show you a couple things. And if you like what you see and you like what you hear, we could set up some additional sessions for a few months down the road, and we can take it from there. So you go, sure, Stephen, I will take you up on that offer. So I met on a Sunday morning at like 6 a.m. for 1 hour. The first 30 minutes of that hour-long session was spent setting up Bob's ever first online brokerage account, because before that point, he had never placed a trade at all in his entire life. And the second part of that hour-long session was spent teaching Bob this trend setup, which is the exact same method I'm going to share with all of you in about 2 minutes' time. And after I shared it with him, he said, you know what, Stephen, you're right. It does only require me to take a look at the market just once a week. And even with my limited knowledge, it is simple enough that I feel like I can do it. So yes, Stephen, can we please set up some additional sessions for a few months down the road? And can we take it from there? So I said, of course. But the problem was, folks, Bob never showed up to any of those other sessions. And I cannot believe it. I was crushed. I was doing the trend setup. It was working very well for me. And I had so much more where that came from. I could not believe that Bob had blown me off. So finally, like a year or two down the road, I get a random email from Bob, and he goes, hey, Stephen, it's Bob. I'm so sorry for blowing you off. I never should have done that. But the reality is I never needed to meet with you ever again, because I made 41% investing in the last year just using the trend setup. In fact, folks, give me a 41 in the chat box if you would like to make 41% on your investments in the next 12 months, just like Bob did. Let me see those 41s, folks. Absolutely, absolutely, because that is a phenomenal return. So the obvious question is, well, how did he do it? So here's the deal. When breaking down stock market returns, it turns out that there are weeks in every year which are consistently profitable. In order to locate this profitable setup, we must figure out what weeks they are. Folks, the good news for you is we have. So in breaking down the profit and loss by week in the overall stock market, folks, we have found a winner. Now, what are we looking at here on the left-hand side of the screen? We are looking at S&P 500 returns, but this time from 1990 to the beginning of 2020. So we're looking at 30 years worth of data. Now, on the screen, we have the S&P 500 broken down 2 ways. The first is the gray line. That is your buy and hold S&P 500. So if you bought on January 2nd, 1990, you would have made a bunch of money, lost half. Made a bunch of money, lost half. Made a bunch of money, and who knows exactly where we go from here. Now, the orange line, folks, on the screen is the trend setup. And don't worry too much if you don't understand it 100% the first time I share it with you, because I'm going to repeat it a few times here. But the orange line, folks, the trend setup is weekly returns in the S&P 500 following a drawdown or loss of between 0.5% to -3%. So here's what we did. We went back into the data set And if we ever saw a single week in the S&P 500 where the return was between negative half percent to negative 3%, we would buy the next Monday, sell the next Friday, and add those results to the orange line. Now, folks, it's clear to me, and it's probably clear to you too, that since 1990, so again, we're talking 30 years, folks, investing in weeks following a drawdown or loss of between 0.5% to negative 3% would have resulted in an investor beating the market without any of the major losses. Okay, folks, so that is the setup. So how do we take advantage of that? So here's what we're going to do. Before the stock market opens on Monday, now the stock market opens at 9:30 a.m. Eastern time each Monday. So before that happens, we're going to check to see if the previous week in the S&P 500 was down between 0.5% to negative 3%. And if it was, we're going to log into any online brokerage account. We're going to type in these three letters, SPY, and we're going to click those big green buttons to buy as many shares of that stock as we can. That's how we get in. Okay, folks, how do we get out? Well, if we did buy on a Monday morning, we're going to hold a position until the end of the day on Friday. We're going to log back into our online brokerage account before the stock market closes on Friday. We're going to type in those three letters again, but this time, folks, we're going to click those big red buttons to sell all the shares that we bought earlier on in the week. Let's repeat that one more time, folks. When the stock market opens on Monday or before, we're going to check and see if the previous week in the S&P 500 was down between 0.5% to negative 3%. And if it was, we're going to buy. And if we did buy on a Monday morning, we're going to hold a position for the entire week, and we're going to sell it before the stock market closes on Friday. And since this single strategy, folks, has beaten the market over the last 3 decades, we're going to repeat this, right? So we're going to set up these weekly reminders on our phones, on our calendars. We're going to add sticky notes to our computers. But let me ask you a question right now, folks, beginner or pro. Can you do the trend setup, right? Can you log in on a Monday? Can you type in 3 letters? Can you buy? And on Friday, can you sell? Because if you had followed this strategy since 1990, you would have beaten the returns of the market without most of the major losses. And drum roll, please. And returns of over 1% per week. In fact, here are how the numbers actually break down. Going back to 1990 in the S&P 500, the average percent gain per week is up 0.20%. But if we just compare that to the average percent gain per week following my trend setup, 6 times greater, up 1.21% on average. And maybe even more impressive, folks, going back to 1990, the largest 1-week loss in the S&P 500 was 14.98%. But if we compare that to the largest 1-week loss following my trend setup, a fraction of that maximum loss. And again, folks, I see in the chat box, folks asking about, well, how did this strategy do during 2008 and 2009? Well, ask and you shall receive. What you're looking at now on the screen, folks, is the S&P 500 in gray compared to the trend setup in orange during the financial crisis of 2008 and 2009. And as we can see, clear as day, as the overall market in gray was selling off very hard during the financial crisis, take a look at the trend setup. Take a look at that orange line. It actually turned a 20% profit during the financial crisis. But that is not all, folks. That is not all. Last year, we saw the trend setup occur 8 times. We had 7 winners and 1 loser for an 87.5% win rate. And yes, last year, you could have went out there and just bought stock and you would have beaten the returns of the market. However, last year, utilizing my trend setup, if you bought calls, a 121% return on your entire portfolio. If you bought call spreads, a 104% return again on the entire portfolio. If you sold puts, 51%, or if you sold put spreads, a 108% return again on the entire portfolio. And again, yes, 2019 was a completely different market environment compared to 2020. But the last time we were able to execute this strategy was on the morning of April 6th, so about 2 weeks ago. And from the open on Monday to the close on Friday of that very week, the S&P 500 was higher 212 points. So on that week, I'm buying calls, $100 turned into $542. $500 turned into $2,710. That very week, folks, I'm buying call spreads, $100 turned into $250. $500 turned into $1,250. And as you could have expected, folks, my members of Market Hero did even better. Bernard wrote me a note that week. He said, I followed your trend this morning, and I'm very happy that I did. It was very easy to do. It took me less than 30 seconds to do. And I just closed a trade out for a $3,380 winner. Consistently profitable trades like these from Market Hero are continuing to allow me to supplement my income during these challenging times. Or Doris also wrote me a note. She said, there are no words to say about this trade in Market Hero other than thank you. The trend trade that we did this week was the first trade I placed since joining Market Hero, and I just closed the position out for a $2,799 winner. My most profitable trade ever on my first trade as a member. Keep them coming. Okay, folks, that is the trend setup. If you have any questions specifically on that trend setup, go ahead and pop them into the chat box. I'm just going to take a little bit of a swig of water, and then we will move on to the next bit of content here. All right, first question. What if the week is down more than 3%? Well, if the week is down more than 3%, that would be outside of our criteria. There are plenty of other things to do in that situation, but if the market is down more than 3% on a given week, the trend setup would not be a go the following morning. Very cool. Stephen, for options here, which expiration are you talking about? Sure. So again, similar to the weekly setup, the trend setup can be done with stocks or options. That's up to you. But if you want to go ahead and utilize options, we always do it in that Friday weekly expiration. So nice and easy, very straightforward to go ahead and accomplish there. Stephen, is this for Forex? No, we made no mention of Forex at all in this training. We're only talking about the S&P 500 here for this specific strategy. Very cool. Stephen, this is such a simple trade. I can't believe you're giving us this information for free. So I appreciate the kind words. And let me say a few things about that. Number one is, look, I really love teaching individual investors and traders how to be much more consistent with their results. Number two, I have dozens and dozens and dozens of strategies that are this simple and then this easy to follow. And number three, I'll say is, look, the market is so big. People don't realize how large the market is. There's tens of billions of dollars changing hands, every second of every day. It would take tens of billions of dollars all doing the exact same trade as us at the exact same time before something like this became saturated, if you will. But I appreciate the kind words about that. Stephen, can I do this in SPX? Sure. So SPX is just 10 times the size of SPY. So you'll just have to understand that there are more risks and more rewards because the contract size is just 10 times as big as SPY. But for those folks who are interested in buying and selling stock for this, you cannot do that with SPX because there is no stock to buy in SPX. Very cool. So again, folks, I do not see any other pressing questions in the chat box. But while I take this one last swig of water, folks, do me a favor. In the chat box, give me a 1 if you have enjoyed this training so far. If you learned something brand new, or if you had an aha moment, or you wish you knew these strategies literally 48 hours ago. If you fall under any of those categories, while I take this one last swig of water, give me a 1 in the chat box so I know that we're still providing a ton of value on this training here today. Very cool, folks. I appreciate the kind words. And again, for some of those folks who we maybe did not get to every single one of their questions, hopefully at the end here, we'll have a bunch of time to be able to answer as many questions as we can. Okay, folks, that was Q&A part 2. So let's recap where we are at this point. Now, we first talked about that weekly setup, which again, talked about going back to the year 2000. Tuesday has beaten the returns of the market. And of course, not only did it do it last year, you all just saw how ridiculously profitable this strategy is this very week. And then we talked about that trend setup, folks, which talked about going back to the year 1990 in the S&P 500, weeks following a drawdown or loss of between 0.5% to -3% have not only beaten the returns in the market, it did it in a very big way last year. And you all just saw how insanely profitable this very strategy was the last time we were able to do it. Now, at the beginning of this training, I promise you that you would learn new ideas that would start making you money immediately, whether you're a beginner or a pro. So I have to ask you folks, was your time together valuable? Did you enjoy this training? Do you understand now how I'm able to do what I do in the stock market and some of my students are able to get such big time results? And can you see how these setups will allow you to profit immediately, whether you are a beginner or a pro? And do you see how little time and knowledge is really needed to invest? Because here's the deal, folks. I have complete confidence in you because you all promised me that you're going to go out there and take action on these methods immediately following this training. And while we did spend about 35 minutes together and go over 2 very consistent and very profitable strategies, there's only so much we can go over. Imagine spending more time together, how much more valuable that would be to you. Now, in the beginning, I also promised you an opportunity to join me in taking your next steps together by joining our Market Hero community, which is designed to give you the exact step-by-step formula for crushing in the market and achieving mountains and mountains of success. Because yes, folks, the weekly setup, it has beaten the market over the last 2 decades and was insanely profitable just 48 hours ago. And yes, folks, the trend setup has beaten the market over the last 30 years, and you all just saw how insanely profitable this strategy was the last time we were able to do it. But those are only the tip of the iceberg. And Market Hero is designed to get you results big and fast. So why wouldn't you consider something that would practically guarantee your success? Which is why it's my pleasure to extend an exclusive invitation to stock market dominance by becoming a Market Hero today. Now, over the next few minutes, I'm going to go into depth about what Market Hero is. And if you think it's right for you, I want you to get it. And if you don't, I don't want you to get it. Plain and simple. Does that sound fair to you? Very cool, folks. So here's the deal. If you want to achieve true financial freedom or supplement your current income or take parts of the profit that we're getting of up to 10.37% per trade, and you want to do it all by following a proven, modular, step-by-step framework that will leave no guesswork, even if you're a complete beginner, then Market Hero is specifically for you. So here's what's finally going to work for you, folks. The first thing you're going to get with Market Hero are my profit crushing setups. Now, we have about 8 dozen or so of these, but I only have a few minutes to go over, so I'm only going to go over a handful of them right now, just like setup number 3. It's profitable 91% of the time for an average of 10.75% ROI, and this is a once-a-month trade that we will be doing today, folks. TC, one of my members, did this recently, and as you can see, made $1,700 or 52% ROI overnight from this one trade. Or Ron, he says this was a very easy trade to do with very limited market exposure. He made $900 less commissions, and he's super happy. Or what about Ben? Ben says, more that made up my membership with this trade. I'm looking forward to more good stuff. We also have setup number 7, the 15-minute window each trading day since 2009 that is responsible for 49% of all market returns. Now, last year in the month of April, one of my members by the name of Lee, he put this to the test. So he logged into his account the exact same time every day, bought the same stock, sold it 15 minutes later, and as a result, made over $4,000 profit alone in one single month by investing just 15 minutes a day. Would you agree with me, folks, that this is yet another example of how you can make more money and spend a lot less time doing so? I think so as well. We also have setup number 8. Setup number 14, the 8 days of the year responsible for 36% of all market gains, and we profit in less than 24 hours, just like John did, who made 42% profit in one day. Or Silvio, who made $2,800 profit in one day from this one trade. Or Satyajit, who made 28.4% in one day from this one trade. Now, the really cool thing about these profit crushing setups are not only are they going to hopefully show you how to make a lot of money, but they're definitely going to save you a ton of time and money by getting rid of those newsletters, those books, that financial advisor, those newspapers, those things that never made you a dime in the first place. In fact, folks, our average Market Hero member saves $213 a month when they come on board because you get to get rid of all this stuff that never made him a dime in the first place. Now, it's critical to me, actually, I would say it's vital to me that every single one of our members of Market Hero can participate in all of our strategies. So whether you have a cash account, a retirement account, a margin account, a big account or a small account, it does not matter because we have a version of every single one of our methods for you to take. So here's what you're going to get with Market Hero. You're going to get those profit crushing setups so you can hopefully make yourself a lot of money. You're also going to get my automation tools so you can save yourself a ton of time and allow the system to work for you without you having to be in front of the monitor to click the button yourself each and every day. On top of that, we also have my done for you tools and cheat sheets and my morning game plan, which I want to go over very, very quickly. Now, here's an example of one of our many Market Hero cheat sheets, and all it does is ask you 3 questions about any stock you're looking at. And based on your answer to those 3 questions, it will reveal to you which is the right trade for you to take in that stock on that day. So when you're thinking about these cheat sheets, like imagine you're sitting at home and you're trading all by yourself. But with these cheat sheets, it's like I am standing over your shoulder telling you exactly what I would do. It completely takes the guesswork out of which of our setups to follow. It is a step-by-step, handle it as investing comes. Now, folks, if you're like me, you wake up, you're looking like this. Your hair's all over the place. You might not know where you are. You definitely don't know what time it is. So the first thing you're going to do is you're going to flip over and you're going to take a look at your phone. And what you're going to get from me from this day moving forward is a morning game plan. So think about your favorite sporting teams, right? Manchester United, the New York Yankees, the Dallas Cowboys, Los Angeles Lakers. They never go into a sporting event blind. Why? Because they have a game plan, okay? This is your game plan each and every day. And as you could have expected, my members of Market Hero love the game plan. David wrote me a note a couple days ago. He says, you're killing it. I took 14 stocks out of the game plan. 4 are closed today to more than 50% profits, and 10 are still running at the green zone. Am I too greedy? I see money laying down on the floor waiting to be picked up thanks to you. He also wrote me another note this week. He says, following your morning game plan, I have normally 10 to 14 open positions, while almost every day, 2 to 3 are closing as a winner of 50% profit targets. Today's winners, Avago, Chipotle, and Disney. This is absolutely amazing. I don't want to show up early. This is very easy to do. David has a game plan each and every day, folks, and I want the exact same thing for you. So here's what you're going to get with Market Hero today. You're going to get those profit crushing setups so you can hopefully make yourself a lot of money. You're also going to get my automation tools so you can save yourself a ton of time and allow the system to work for you without you having to be in front of the monitor to click the button yourself each and every day. On top of that, you're also going to get my done for you tools and cheat sheets and my morning game plan so you know how to attack the market each and every day. And then, folks, I said I wanted to do this together. So for that, you, myself, and your fellow Market Hero members are going to get on a live weekly webinar training every single week so you can get your questions answered by me live and see what's working for me in real time. And if once a week is not good enough for you, 24/7 access to our private Facebook group and email support so you can get your questions answered all day, every day. So the total value of Market Hero, $15,583. But look, I told you at the beginning of this training that we would make this training worth at least $5,000 your investments. And I know they proved that beyond a shadow of a doubt that that was dead true. But as you guys also know, I'm not going to charge you $15,583 to get access to the live webinar trainings every single week, to the automation tools, to the Facebook group. But I have a question for you folks. What if I did charge you $15,583? Would it be worth it? If all it did was make you very profitable by doing trades just 8 days a year, then would it be worth it? Of course it would, because you get to take off the other 357 days. So yes, of course, it would definitely be worth it. Now, if all it did was supplement your income by making a few extra $1,000 every month for the rest of your life in a semi-automated fashion, then would it be worth it? Well, of course it would, because after a few months, you pay off that 15 grand and everything from that point moving forward is absolutely gravy on top. So yes, of course, it would definitely be worth it. Now, if all it did is by utilizing my daily reminders, allow you to never worry about your finances ever again and allow you to spend more time with your family and travel, then would it be worth it? Of course it would, because that is a phenomenal lifestyle. Because you see, folks, the total value of Market Hero, $15,583, that's the total value of Market Hero. But everything in Market Hero is the exact step-by-step formula for how I was able to make over $1.5 million of profits in the stock market. As you can see, this is a recent screenshot from my trading account. But it's not just me who's having a really good run of it lately. It's my members like Carlos, who wrote me a note literally earlier today. He says, thanks to you and Market Hero, I'm having one of my biggest weeks of my entire trading career. Placing your trades in Amazon, Tesla, SPY, and WFC, my account balance is up $16,000 just this week. I'm going to put all of that money into my grandson's college savings account. Or Dorothy wrote me a note this Tuesday. She said, between SPY and Amazon today, my account is up $4,775 just today. This is incredible because it matches my best month ever in one single day. I cannot thank you enough for your coaching and your trades. Members of my family have been laid off recently due to COVID-19, and my profit today will go a long way in keeping my family financially fit. Or Amos wrote me a note last night. He said, I feel like I've struck gold since joining Market Hero. 2 weeks ago, I made $4,900. Last week, I made $3,200. So far this week, between Moderna, Regeneron, Amazon, and WFC, I am already up another $2,998 this week. All of these profits I have been making by following your methods are going to allow me to have my mortgage fully paid off in no time. So let me ask you a question then. How many of you, if you could, would write me a check for $15,583 to learn the exact step-by-step formula for how to make over $1.5 million of profit in the stock market, right? It really puts it into a different perspective now, doesn't it? Because Market Hero is not a cost. It's an investment. You see, whether you like to admit or not, the people around us who are the most successful are the ones who continuously invest in themselves. They invest in their skill, in their mind, in their craft, and in their education, because they know the investments that they make in themselves are the ones that generate the greatest results. Now, don't just take it from me, folks. Let us ask the wealthiest, most successful investor ever, Mr. Warren Buffett, and see what he thinks. Well, folks, he agrees. He says the most important investment you can make is in yourself. So you can see what it would be a steal at $15,583. But as I told you before, this is a $5,000 offer for everyone else walking down the street. But because you're here with me today, there's going to be a ton of incentives and a giant discount. So ladies and gentlemen, you can get started today for $997 for lifetime access. This is not a subscription. This is not an automatic rebill. This is one lifetime investment, and that's it. So open up those browser tabs, head on over to stephenbrooks.co/VIP and invest in yourself today. Now, if you are thinking that $997 is too much of a one-time investment, here are a handful of our brand new members who made that investment back just this week. Tuesday, Lynn, a new member of Market Hero, made $2,700 from one of our trades. Paulette, on Monday, a new member made $1,600 over the weekend from one of our trades. David, a new member today, made $2,000 on ATVI just today, folks. Now, I kind of have this saying, folks, if I can't make you money, then I don't deserve yours. So for that, we have a very interesting and very generous 30-day double money back guarantee, and it goes like this. Part 1, I ask you to learn and try 5 of our methods in the first 30 days. Now, you can try my real money or you can try my paper money. That's up to you. And if they don't work out for you in the first 30 days, all you have to do is email my team, let us know that information, and once we verify it, we'll instantly reverse the charge, no questions asked. And the second part goes like this, and make sure you are paying attention. Not only will we instantly reverse your charge, but I will also write you a personal check for $997 cash, which means when you open up your browser tabs, you head on over to stephenbrooks.co/VIP. The investment that you make in yourself today is completely risk-free. So again, folks, here's what you're going to get with Market Hero. You're going to get those profit-crushing setups, so you can hopefully make yourself a lot of money. You're also going to get those automation tools, so you can save yourself a ton of time and allow the system to work for you without you having to be in front of the monitor to click the button yourself each and every day. On top of that, I'm also going to give you my done-for-you tools and cheat sheets and my morning game plan, and then we're going to do this together, folks. Live, every single week with me, so you can get your questions answered by me live and see what's working for me in real time. And again, folks, if once a week is not good enough for you, 24/7 access to our private Facebook group and email support, so you can get your questions answered all day, every day. Now, you might be asking yourself, well, should I join now or should I join today? Well, for the first 50 new members only, I cannot stress this enough. For the first 50 new members only, you will get to see every single trade that I make in real time. I call these my profit screaming notifications, but really they're just our trade alerts. As you can see on the screen, we have some significant results this year, a very high win rate, a very high ROI per trade. This is a $10,000 value delivered directly to you, so you don't just get the playbook, you get every single play that I'm running in real time. This single bonus alone, the ability to get to see every single trade that I place in real time, is worth many, many, many multiples of what your one-time investment in Market Hero is, and it cannot get any more done for you. Kevin, one of my members, wrote me a note yesterday. He said, "Hi, Stephen. I'm very pleased with the results so far. Here are the results for the last 30 days. 11 trades, 11 winners, 11.72% ROI per trade, 24% ROI account growth. I could not be happier with the level of education you provide, but man, your trade alerts are priceless to me. It is like a double income." Or Kyle wrote me a note on Monday of this week, and take a look at the words in red. They are amazing. He said, "Stephen, I can't believe that it's over a month actually since I joined your service. I've taken all the trades that you have sent and they have all been profitable. If this continues over the course of the year, I will actually have a real retirement plan, so I will be able to supplement my Social Security income." Amazing, folks. So again, this is $997 for lifetime access. This is not a subscription. This is not an automatic rebill. So you're not going to get an email from us a year from now saying, "Hey, pay us more money to maintain your membership. This is $9.97 for lifetime access. And again, folks, it is fully backed by our 30-day double money back guarantee. Now, for our US customers only, unfortunately, PayPal does not offer this for our international customers. They can still check out via credit card. But if you live in the United States and you go over to stephenbrooks.co/VIP, there will be a blue button at the bottom of the page that says Pay with PayPal. If you click on that button, you'll be sent over to PayPal. And if you check out via PayPal credit, PayPal will give us the $9.97 investment today, and then you will enter into a payment plan with payments as low as $27 a month. So if you live in the United States, you want to get started now and pay later, PayPal credit might be a great option for you. But again, PayPal just doesn't extend this opportunity to international customers, but they can still pay via credit card. Now, there's a very good book out there by Robert Kiyosaki. It is called Rich Dad, Poor Dad. And I don't know if any of you have read it, but it's a very good book on personal finance. It has been a New York Times bestseller for decades. And in the book, one of the things the author talks about is the phrase, I can't afford it, or it costs too much. Like, I know buying this stock would provide me a 50% return on my investment, but I just can't afford it. Now, the author, he asks a much better question. He asks, how can I afford it? A statement like I can't afford it, it completely shuts you down. But just by asking a question, your mind starts to open up and starts to look for answers, and it becomes much more resourceful. So here's the deal, folks. The successful people like you and I, we don't worry about how much it costs. We only care about ROI. We care about return on investment. So think about it. If not you, then who? If not now, then when? I believe you can either make money or you can make excuses. If you want to make money, then get all the help you need. If you want to make excuses, then don't complain. Don't complain about why you are stuck. Do not complain about why you are not getting the results that you want. Don't complain because you've hesitated long enough. Today is the day, folks. You've hesitated and waited long enough, and today is the day you say, it's my time. I'm going to do it because my future is worth it, my family is worth it, and I'm worth it. So again, folks, if you want to achieve true financial freedom or supplement your current income or take parts of the profit that we're getting of up to 10.37% per trade, and you want to do it all by following a proven, modular, step-by-step framework that will leave no guesswork, even if you're a complete beginner, then Market Hero is specifically for you. Now, folks, we have it's 12:52 here, so we have about 3 minutes that we can go over some of these questions before we have to go ahead and exit this training here today and pass it on to the next awesome speaker. So I'm just going to take a little bit of a swig of water, and then I'll come in here and answer as many questions as I can within the next 3 minutes, folks. All right, first question. Stephen, I have a full-time day job. Will Market Hero work for me? Yes. So right now, folks, 85% of our current membership lives outside of the has a full-time job. So 85% of our membership currently has a full-time job. So if you're one of those folks that's like, hey, I have a full-time job, can I do both of these? Of course you can, because again, 85% of our membership currently has a full-time day job. And one thing I want to mention, folks, before I get to the next questions, if you need any help purchasing today, give us a call at 407-315-1172, and one of our VIP support specialists will be on the line to help you out with whatever you need. Again, if you need help purchasing, give us a call at 407-315-1172. Let's see. Stephen, is it okay for me even though I am a complete newbie? So yes, if you are new to trading or new to investing and you're like, hey, will this work for me? The only question you need to answer to yourself is, am I willing to follow directions? If you are willing to follow directions, you have as good of a chance as anyone to be successful with Market Hero. Can you explain the money back guarantee again? Sure. So let's say you try 5 of my methods on paper money, so you don't risk any real capital, right? You try the trades, you send the information over to my team, they verify it, we give your money back, plus we write you $997 cash check. So in that situation, because you tried the methods on paper money, you risked zero real capital. And the absolute worst case scenario, like the sky is falling, worst case scenario is you make $1,000 in the deal. So I don't know about you, but there's ever a situation where my worst possible outcome is I make $1,000 in the deal. I would do that any day of the week, and I think you'd be crazy not to do that. Do I have to know how to code for your automation tools? No, you do not. Absolutely not. Because a lot of what we do is rules-based, our online brokerage account can handle the majority of that. We can't fully automate everything, but the majority of what we do, we can absolutely automate, and you don't need to have any coding background or any specific online brokerage accounts to make that happen. Okay, one last question, folks, really quickly. One last question. Doug, if I don't buy the course right now, can I still get it later? When and how? So first of all, Market Hero is not a course. I don't believe you can become a pro at anything because you buy a course, you read a couple books, or you watch a video. I believe the only way you can become a pro at something is if you get that information and then you're able to work with someone in somewhat of a mentorship type of position. So that's what Market Hero is. It is a coaching program. Yes, you get the cheat sheets, you get the trades, you get the ideas, but then you can email me whenever you want with questions. You get a live training every single week. And if you are one of the first 50 new members to join today, you get to see every single trade I make in real time. So Market Hero is not a course. It is a coaching program. So without further ado, folks, it's about 12:55 here. I'm going to go ahead and exit this training. I want to be able to allow the next speaker to go ahead and get ready for their presentation. But again, folks, if you need help purchasing, just go ahead and give us a call at 407-315-1172. And one of our VIP support specialists will be on the line to help you out with whatever you need. That's it for me. I'll kick it back to the moderator of the event.
Steve, thanks a lot, everybody. And I just posted a link for everyone. If everyone should jump on that promo with Steve Brooks. Steve, thanks very much for coming in, and very, very educational. And basically, we got Bo that's going to be coming, joining us in within 5 minutes. So I'll give you guys a couple of minutes to check out that offer. And then let me just go out there, and we're going to share the screen really quick. Hold on. Let me take care of this screen right here. All right. All right. Okay, so it's going to stand by and wait a couple of minutes. Let's just wait for, got about 3-4 minutes. And then Bo will come on.
I'm here ready when you are.
Oh, all right. There you go, Bo. How's it going, Bo?
It's going great. No complaints. It's kind of funny. Everybody is in a tizzy about the lockdown, and I was just talking with a couple of other traders how little the coronavirus pandemic has really affected those of us who kind of made this our lifestyle. This is just another week for us, and we really don't see a lot of the negative effects until we actually go out to the grocery store and realize, oh geez, things are really different. So feeling very thankful that I chose to make this my life and my career. And so for those of you who are interested in this, or maybe even kind of considering it for the first time, Fausto and I've been, we've been doing this a long time, probably known each other for at least 15 years. We've seen a bunch of these crashes, and the crash really does kind of sober people up and bring them to a level of awareness that they need information, they need education on the markets. The markets just aren't this beneficent thing that, pushes out money every year. So I'm really excited. Welcome all of those of you who are sort of in the new cohort there. It's an amazing and beautiful way to spend your life.
Yeah. All right, Bo. In the meantime, could you share your screen? I don't know if you have to take control really quick. So
sure.
PowerPoint up and running while
all right.
Everything taken care of.
Cut you off.
Let me stop sharing. Okay. And then you should be able to take over right here. Okay, there we go.
Yeah, there we go.
Beautiful. Yeah, so really quick, just to let you guys know how I know Bo. I know Bo. It's funny, Bo. Basically, back in the days of the Money Show, being at the Traders Expo, I remember Bo was basically was a lot of times a moderator, very, very well educated in the industry. He basically, a real true professional trader, does exactly what I've been doing for several years. I started when I was 25 years when I first started, but like I said, Bo's been a great educator, great contributor, great everything that I've learned. And like I said, you probably haven't seen him around as much, back in the early days, because he's basically he'll tell you a little bit about it. He took a job as a professional trader, but you all have a passion. It's like professors, right? I was talking a lot of people in my industry, not even my industry, just I know accountants and stuff. They become professors, because they love their job. They want to go back and teach. And, that's why one of the reasons why we always come back and do what we do here. But listen, the biggest thing that, by being a great educator, like a guy like Bo and Brooks, and, and you're going to see, Steve come up next, that you got to know what you're basically doing, because you don't want to go out there and trade blind. And we take the time to come out here and educate all of you to do this, so you understand that if this is the right way of doing it, the right way or the wrong way. But you have to enjoy it. But yeah, it's great having you, Bo. And like I said, I can see you got your PowerPoint up and running, and I see you got your lovely wife over there on the left. So we'll go out there, and you can take these, take the stage, and you can start.
All right.
Pick up and start the event.
You got it. All right. Well, again, thanks everybody for taking some time out to be here with us. I appreciate it. Thanks to all you guys for the opportunity. So appreciate that very much. As I said, this is kind of a time of contemplation and thankfulness as we go through a lot of turmoil in our economy. And ironically, that turmoil means capital needs to be redeployed. And that means there's going to be amazing, lifetime altering, once in a generation opportunities for those of us in the trading world. So I just can't emphasize that enough. But all that opportunity isn't really very valuable to you if you're not a consistent trader. And that's something people really struggle with. So today's presentation is really going to be about the real pathway to total trading consistency. And I'm going to walk you through what we need to do so that you can realistically get to a place where you can basically look back at your trading results, see a history of reliable consistency, so that you can confidently project your results into the future, just kind of the same way you would cash flow for any other traditional business, because really trading is just a non-traditional form of business. Far too many traders are really stuck in a place where they rely on hope for future profits, and we want to get you away from that to a place where you can really be confident, experience reliable, repeatable results from your trading efforts. Okay, so that's kind of our goal. Real quick, we got to stay compliant with the law. You need to be aware of this government required disclaimer. And the thing that I would always highlight is never ever trade money you cannot afford to lose. It needs to be risk capital. And that's something that people often violate as we get into scary times, crash times, markets in turmoil. Really, really important that you treat this as a business and use true risk capital. So there are some other important factors there. If you want to check that out, you can always check it out at the bottom of our corporate page at rbjfinancialgroup.com. So let's get into the good stuff here. Before you even think about the money that you want to make from trading, you need to understand the reality of what professional career traders do to make their money from the markets with consistency. Because if you don't, you're just simply never going to be able to replicate their success. And even worse, you're going to be constantly stuck jumping from one system, one strategy to another without ever accomplishing your performance expectations. And you're just going to end up endlessly struggling to achieve a sustainable level of consistency from your efforts. You're just chasing your tail. So now to give you a little bit of context for what I'm about to share, as we said a little bit there in the beginning, I started trading for a living in the late 90s. And if you haven't traded, there's a lot of downtime in the markets while you wait for your trades to either make their appearance or to work themselves out. So during that time, I really tried to maximize my knowledge, constantly deepening my understanding, my skill set. I read, tested, studied just about every single way you can possibly analyze the markets. And so I soon realized that there was a ton of value in my body of work that could seriously help others speed up their learning curve, not make all the dumb mistakes that cost me that I did. So I started one of the very first real-time trading rooms, began writing articles, and that sort of naturally evolved into becoming an edge consultant and then an author in the financial industry. So I always specialized on matters of market analysis, trading risk management. And you can see, I've kind of done the circuit, been in a lot of interviews, done a lot of magazine articles, again, written a couple of books for McGraw-Hill, and kind of have seen a lot of different traders, a lot of different cultures, a lot of different styles, which really gives me some interesting insights into what works and what doesn't. So I love business sort of at its core. And so I realized that I had been watching stocks. I've been watching these businesses vicariously, and I had a lot to learn about operations and management. So I decided to get an MBA from Boston University, which was really an amazing eye-opener. It brought me a lot of insight into the business of trading versus just the skill and execution of forecasting the markets and optimizing my edge. So I kind of rounded things out and was really valuable for me. But really the work I'm most proud of and probably best known for when I look back is that I literally wrote the book on how to optimize your trading edge, which was published by McGraw-Hill. And it's also been translated into German and Japanese. So I'm really fortunate to impact traders and help them overcome their struggles in a lot of different countries as well. Now, in the book, I discuss a phenomenon in the market that I discovered and defined that all of you have experienced. I named it the payout payback cycle. Now, payout payback cycle is based on an inherent flaw in the market, which I'll cover a little bit deeper in a bit. And it's actually the mechanical reason behind almost all your struggles, your inconsistency, and all the frustrating experiences and humiliating losses. So when you're in a payout cycle, you're in alignment with the market environment that particular setup or strategy that you're using was optimized for. And so you're making money and doing great, and everything's good. But then sooner or later, the markets will shift and change, as they always do. And then you start to experience the payback cycle in the market. And that's when the same strategy that used to work so well is out of alignment with the current market conditions. So it feels like everything just suddenly goes to hell on you, and you're confused and frustrated, and your performance starts to implode, and you're stuck there wondering what happened, right? So does that experience sound familiar? Now, it should, because this is a universal problem that all traditional setups and strategies share. Now, the good news is that this roller coaster of winning and losing, and this sort of manic depressive cycle, isn't your fault. The hard reality of the payout payback cycle is that it's really a blind spot for most traders, and a lot of traders suffer needlessly from it without really even realizing what's causing this inconsistent performance. And this goes to even professionals. System creators especially are constantly victims of this fatal flaw. And again, that's just the unfortunate reality. And it's the reason why you, or if you're developing your own systems, or whatever, gurus and teachers that you followed, are always working really hard behind the scenes to keep one step ahead of the markets. They're always jumping from one strategy or system to another. I'm sure you've seen people update their work to maintain their access to edge. So I want you to pay close attention, because now you're about to understand the real reason why everything you've tried up till now just hasn't worked for you long term with any consistency. It works for a while, and then it kind of leaves you at the altar. And because it's critical for you to be able to determine, without emotions, totally with data, with objectivity, if and when the odds are strongly stacked in your favor and when they are not. Because when the odds are against you, what may have seemed like a great potential trade to pull profits from, even if the setup looked absolutely perfect when you took it, those are the trades that often turn into the miserable ones, the ones that struggle and make you frustrated, that lead to large, uncomfortable drawdowns and eventually another loss. So we want to have an objective way to identify and avoid those from the start before you actually take risk and get stuck. All right, so let's just see one of the simple analysis steps that we use to measure and value when the market's on our side and when it isn't, just to kind of give you a little taste of what I'm talking about here. It needs to be something simple and repeatable, like this next example, which is just just one layer of our full methodology. Now, we all know the markets cycle up and down. That's kind of obvious, but let's go a little bit deeper and think about why they ever move at all. This is a daily chart of Apple. It's a popular stock many people like to follow, so I put it up there. Now you can see how this stock cycled up and down within its uptrend. And also notice how its volatility also cycled, right? It gets very volatile. It moves very quickly and directionally. Then it kind of chops sideways. Then it makes a big directional move. Then it chops sideways. So these cycles are all over the market. And this particular stock, like any market traded asset, is going to experience phases in the cycle of expansive movement and then consolidation as the market digests. And what it's doing is attracting new bullish interest, new constituencies, which help it break out and trend as it goes to a new high. And obviously what we're experiencing most recently is when it breaks down, it causes a new wave of fear and panic, and you get a big selling cycle. So these surges of action or momentum, whether they are bullish or bearish, can be measured with a number of different technical tools. In this screenshot, I'm using a stochastic indicator to measure and track the changes in buying and selling pressures in this particular example. But it is important to point out that this is just one of the factors we look at, but I just want to keep it simple so I can quickly illustrate my point. Notice the cycles of buying and selling here, right? You see how the momentum indicator also cycles as well. If we look at the last cycle and the information that the momentum indicator offered to us, you can see that price cycled up and down, but really kept bouncing pretty reliably off support, right? As it releases higher, it comes down, tests support, it bounces back up. Yet at the same time, you can see each down cycle within that little choppy range in the momentum indicator showed that there was actually increasing bearish pressure in each one of those waves of selling. Okay, this simple visual analysis gives us a very clear two-dimensional indication that the bulls are losing momentum in this market. right? So this totally valid technical buy signal, right? You got a pennant or a rising wedge, whatever you'd like to call it, may actually have some hidden weakness that makes it likely to struggle and fail. So see how simple and intuitive this process of objective data analysis is. I mean, you just have to remember this is an asset that's being bought or sold. It has buying pressure, selling pressure like anything else, whether it's a housing market, or some kind of a retail item. It's all the same stuff. Bottom line is I want you to start to think about any market, and this is a stock, but this could be Forex, futures, anything else, as just simply a complex system of buying and selling pressures. And understand that there are ways to measure the shifting pressures, the momentum behind them. And those are all, those pressures are what are really the true fundamentals, because that's what creates the environment in which a market makes its moves. Okay, it seems really simple, but people don't often realize that. And you can see here that this market did break out, right? Got a lot of people involved and quickly collapsed and stopped everybody out who took that breakout trade for another frustrating loss. So what I want you to think about for a minute is how amazing would it feel if you did this type of analysis, you passed on this trade, you watched as it failed without you costing you a cent or putting another stop, right? It gives you this kind of happy, smug feeling when your analysis is right, which is a lot of fun. Because trading should be fun. For a lot of people, it's a miserable, painful experience, and there's just no reason for that to have to be. Now, because the bullish and bearish pressures exist in any market on the planet, these pressures can be identified on any chart, for any symbol, in any market, and in any time frame. So the beauty of this is you're never limited or restricted in what you want to trade in any way. Use the same skills, the same process of demand analysis, whether you're a swing or a position trader, whether you're an intraday trader, a scalper, because it's based on these principles of pressure and energy in the market. So your analysis, the way that you approach your analysis doesn't change on you when you change your market or your time frames. Okay, that's really important and really valuable. Now, one thing I want to point out here is the fact that the market just simply cannot break a meaningful level of support or resistance, and it cannot correct in a substantial way or even crash, as we've experienced recently, without coming into an environment that makes that move possible. And this is the same as, think about it, it's impossible for it to rain on you unless you have a cloud overhead, right? You can't just step out under a clear blue sky and suddenly have it spontaneously rain on you. For the rain to precipitate, you got to have clouds. And more importantly, you actually have to have the right conditions and the right pressures in the environment to allow those clouds to form and make it rain. And the best part is the fact that these forces that create the clouds and fill them with moisture until the rain comes down are actually very measurable. They take time to build and are therefore forecastable. And the market's buying and selling pressures work very much in the same way. So supply and demand pressures, when you understand what factors, what forces, what indications to look for and how to value them, act just like meteorologists who use their forces, barometric pressure, humidity, wind direction, to name a few, and use those forces and value them and parse that information to accurately forecast bad weather approaching. And the supply and demand forces in the market have similar inputs, so they're always going to tell you what to expect before the market makes its moves. And once you understand how to analyze this info, you'll never look at or approach the market the same way ever again, because it just opens up a whole new world of confidence, because you'll have accurate, very odds-based, data-driven analysis, which leads to a really newfound level of performance and, more importantly, consistency. So here's how we do this. In this simple looking chart, there are 6 different indications which represent the bullish and bearish supply and demand pressures that need to be considered. We've got price itself, we have market geometry. Within price action, we have price patterns that can relate very specific information to us. We also have various pools of liquidity that form support and resistance areas in the charts. And then finally, going down to the most granular level, we have the candlesticks themselves. And each one of those is very important. It tells us information about what the market is doing and which direction it's leaning towards. And then finally, we have the momentum behind all these factors and pressures, which we can measure. So what we want to do is analyze the quality of each of those indications of bullish and bearish supply and demand pressures. And then we want to look at those pressures from both a short, medium, and more importantly, a long-term perspective, which gives us the underlying context of the indications that we care about. And now we've gone from 2 dimensions into 3. And this 3-dimensional approach enables us to get both a quality score as well as a probability score for each buy or sell signal that you discover in any given market. It's like looking at a business to buy. Just because you want to buy I don't know, a gas station doesn't mean that all gas stations are equal, right? They have different values. And that's what we're doing here. So hopefully you're beginning to see how this instrument-centered process gives us an objective and reliable way through data to consistently figure out the probability of how each support or resistance level, which is tested, will impact price. And when all these different things are put together, we get an incredible map of where the market is likely to go next with a great degree of confidence. So if we take all these different inputs, we add them up, and we find out that a particular trade opportunity has, let's say, a 70%, an 80%, or even a 90% chance to produce a profitable outcome, well, then you've defined the odds for success with total objectivity. There's no emotion, there's no subjectivity involved. You now have the information to make a very adult decision and be in total control over your market experience. Because data is data. The methodology doesn't tell you what you want to hear. It tells you the truth, and that truth about the odds allows you to be as aggressive or as conservative as you choose for your particular circumstances. So in other words, every time the market comes to a level of price support or resistance and creates a price pattern or setup, our group of analysis tools will show us what environment we're in, what the odds are for that environment to impact price, and its ability to be strong enough to either hold or maybe break through a level of support or resistance, and just all the information that's relevant to our trade and our trade management. So think about how your trading experience would be transformed if, for example, you were buying into a level of support and you knew, because you'd done the analysis, that support had an 80 or 90% probability of holding. Right? You're going to have a lot more confidence. You're not going to be questioning or feeling scared as you take that trade. So simply put, with odds analysis like this, you're able to identify the odds of what you can expect the market to do next with a great degree of accuracy well before you enter a trade, so you avoid nasty market surprises. So hopefully now, whether you're a beginner or an experienced trader, you're going to understand a little bit about what you need, which is an objective process of discovering where the true environmental supply and demand pressures are, and where they lie in context with any opportunity that provides you an indication or a signal, some kind of a buy or sell signal, well before you have to commit to it. And that's the key. Know this: money made consistently from the markets is the byproduct of correct trading behavior. Most everyone goes into the markets and chases after profits. It's actually the other way around. If you really focus on your trading, the money just flows and you don't have to really bother with it. Now, for me, time and locational freedom are huge benefits of the trading lifestyle, as we talked about a little bit earlier. I live in Portland, Maine. It's an unbelievably beautiful place. I can leave my house and be on the boat here, as you see, within 6 minutes. I mean, I can be skiing within 45 for day skiing, or really great skiing in about 2 hours. There's islands, there's all kinds of wonderful lakes if you're a fisherman. And it's a really cool place to be. I couldn't live here if I didn't have this portable lifestyle. So for me, in order to be able to do this long term, and again, I've been doing this since 1997, I have to have an objective, rules-based process, because that allows me to produce a systemic range of outcomes that will allow me to satisfy my goals and lifestyles, right? It's like a business. You can project what you're going to get. You can project how hard you need to work, and you can kind of plan out your life. So here you can see me doing one of the things I love most to do with my extra time, which is sailboat racing. So that's me with the red arrow pointing at my head as I skipper the boat that my team and I compete with. And over here, these pictures is taking a little bit more of a cruise sail on my way to Maine from New York City. That was a lot of fun. We literally passed by Wall Street. So great image there. And on these kinds of trips, the way that the cell modem technology has come up, I can get a solid LTE signal as much as 7 miles offshore. So I bring my laptop. And if I want, I can kind of check positions and maybe even take some trades from the boat. You can see that there. It's the ultimate skill and lifestyle. So what's your why? Why do you want to trade? What? Because you have to put some time and effort into this. It's not easy. So why would you want to do this? And how serious are you about really learning the skill the way that all career traders have to learn in order to make a real living from it? Spend some time thinking about that. Look in the mirror. Think about, why are you here? Are you willing to do the work to get really good at this? Because I'm here to tell you the honest truth. while this is a really, really, really simple business, it's not an easy one. So instead of constantly looking for shortcuts, falling for the get-rich-quick systems and strategies that continue to let you down and might even make you dependent on others, I mean, who could possibly care more about your money than you do, right? You need to learn a skill. So please make a commitment right now, and understand you never want to be disappointed again, and really look at your pathway to trading for a living as starting a business and operating a business. It's going to serve you really well, right? Because here's the problem. It's seductive. Trading should be super easy. Buy low, sell high, right? Not that hard of a concept to understand. So what really is it that stands in your way of getting to your goals for your trading? Well, there's a basic misunderstanding about what really generates profits from the markets, because most pro traders are simply asset flippers, which is just a fancier way to make money than buying some cool stuff at a flea market, then like cleaning it up and flipping it out for a profit on eBay. Right? Markets are these giant pools of liquidity, which allow you to to buy and sell at will. Now, to be successful at this, consistency is critical. And if you want to be consistent, then you must surrender being the operative word, to an objective, systematic process and become a total consistency junkie. And that means that you must make and stick to a proven trading ritual, because of consistency of execution leads to consistency of profits. And you also need to really lean into the certainty of the probability of your analysis, the math of EV, expected value. We'll talk about that in a minute. And you also, and this is something a lot of people slack on, you got to keep a trade log so that you always know where your numbers are. Can you imagine if you went and got money from a bank and opened a retail business or some kind of a hot dog stand, for goodness sakes, and you kept no books and had no clue, whether you're doing well or poorly, or whether you're making money or losing money? I mean, it seems ridiculous when I describe that, but yet that's how some people approach their trading. So you gotta end that. So now let's talk about reality, because I love to talk theory, but I also want to really bring some things home from somebody who's lived this for a long period of time. Let's reverse engineer the trader's needs. In other words, our nut. Okay, so let's get to freedom. That's the goal here, and build a solid financial foundation first. Then you can worry about the Ferrari and the boats and whatever your thing is on the luxury side. So $4,000 a month for housing related expenses. That'll get you a nice apartment or a decent little house someplace, pretty much anywhere in the U.S. or even the world that I've seen. Again, we're not talking about palatial mansions here. You're getting to freedom, right? You're replacing your income, and you can build from there. $1,000 a month for car related expenses, right? You can lease a nice car for that, no problem. $1,000 a month for food. That may become a little more challenging here as we see more food inflation, but still, it's a decent amount of money for food. And then let's not be monks, $1,000 for fun and entertainment. And again, we want to be responsible at this and treat this like a business. So we're not just going to spend everything we make. We want to keep at least $3,000 a month for savings and reinvestment, so we can continue to grow our capital and grow our earnings. All right. So that comes out to a nice round $10,000 per month in spendable cash. So when people get into trading, they go, well, geez, if I could just make 10 grand a month trading, life would be perfect. Well, then reality kicks, because our primary partner, the tax man, is going to take his pound of flesh. So I just went and found a little salary calculator for the state of Maine. We have pretty high taxes, but it's a gorgeous place to live. So, I mean, it seems cheap after New York living in Manhattan. So I guess it's all relative. But anyway, I calculated it out, and basically you need to make 15 grand a month, 7,500 every 2-week pay period, in order to come up with 10,000 in actual take-home salary, spendable cash to sustain this lifestyle that we've just described here. Okay, so those are the parameters. We now know what our needs are. How are we going to create a business plan to generate those profits with reliable consistency? Well, now we come to the ugly truth, which is research, which is just a code word for hard work, right? You didn't really think they'd just give you the money, did they? It's the old joke, if you're at a poker table and you can't spot the sucker, it's you. Markets are kind of the same way. If you're not willing to work hard and build a skill, there are going to be people like me out there who are just going to take your money hand over fist and grin all the way to the boat after doing so. So this is a competition. It's a sport. You got to be good at it. Shouldn't be surprising to anybody. So Now, if you want to do all the work yourself, my book, Optimize Your Trading Edge, has all the info you need to define and optimize a statistical edge in the markets. And you can always grab a copy on that from Amazon or anywhere books are sold. And if you want to go through all that effort, that's fine. That's there you go. But today, I want to talk to you about avoiding a lot of the work you'd have to do. And instead, I want to simplify your life and save you a huge amount of time crunching numbers in front of a spreadsheet. All right. So the first step to that is to figure out the basic framework you need to work within in order to get from where you are now to where you'd like to be in the future. So no matter what you're doing, I don't care. I'm very agnostic, if you can't tell, to strategies and setups. They come and they go. And whatever you're doing, if you like it and it works for you, that's awesome. Now it's time to find out basically the margin in that particular strategy or setup. So whatever you're using, whatever you're doing, whatever you like to trade, however you like to approach the market, you're going to have some kind of a buy and sell signal. Okay. So you need to figure out what your EV is for that particular setup. So let's look at a very cartoonishly simple example so you understand how this works. We have a trade that triggers, based on a certain set of market behaviors that we have predefined and tested. We know from our statistical testing, which is where all the work is, and time and effort, hunting for that treasure, that there's a 70% chance to reach our profit objective, and that our profit objective will average 1-to-1 or a 100% return on risk. You risk $1, you make $1. You risk $1,000, you make $1,000. Okay, pretty straightforward. We're going to assume that we have 100 trades taken because that's a nice round sample size. And if the statistical norms hold, then we would expect to see about 70 winners, which will earn us, let's just keep this simple, $1 for every time we risk $1, we'd expect to make $1 on 70 of those opportunities. And we'd expect to lose 30 times, right? 70%, 70 winners, 30 losers. So that's $30 that goes, takes back our profits. So what's our net? Well, we make 70, we lose 30, we end up with 40 net. And if we take that 40 dollars in profit divided by the 100 trades that we're taking, we now have a 40-cent per trade per dollar risked EV, or expected value. And you'll see why I break this down to the single dollar ratio in the next slide. So my experience shows that there are 2 to 4 quality opportunities per 15 hours a week that you commit to trading on average. Again, you got to not be rigid here. We're talking about averages, right? The world and the market are lumpy. There are going to be times where you're trading frantically and you can barely keep up. And there are going to be times where you might even go for days or maybe even a week without finding a qualified trade. So on average, 2 to 4 is what I've seen. That's 8 to 16 trades per month. Now, so if the EV of a trading strategy that we're talking about here is as we've calculated, 40 cents per dollar risked in the trade, then to achieve earnings of $15,000 per month, which is what our nut is for this this exercise, we would need to do the following math: $15,000 in profit that we want to earn divided by the EV per dollar risked is 15 grand divided by 0.4, or we would need to risk roughly $37,500 total risk for the month. Okay. Basic modeling. 37,500 divided by the 16 trades that we would see is about a $2,300 risk per trade. And in order to keep your trade risk below 3%, which is important because the more you lose, the bigger the drawdown, the higher the percentage you have to make in order to get it all back. So you want to keep your drawdowns small, not only for math reasons, but also for psychology, because taking a big drawdown really hurts the ego. So we want to keep our trade risk below 3%. So that means you need basically 100 grand in your account to realistically achieve this level of earnings. All right, great. Pretty straightforward, pretty simple. Well, but what if you don't have 100 grand? We'll get into that in a minute. So again, I always think about these things in terms of ratios. You risk $1, you make 40 cents with this particular example. That's basically, again, about $1,500 per month in income for every $10,000 that you're trading with. So you can now scale this up or down based on your own needs, your own expectations, your own trading nut, so to speak. So let's look at this from the 30,000 foot viewpoint. If you don't have 100 grand, that's fine. Most people have 5. So let's take a look here from almost like the casino's expectation, right? If you're thinking about, because casinos go through the same process. They've got a positive expectancy. They've got an edge that they're exploiting against the gamblers. That's why the house always wins. And we're doing the same here. Now, again, this is, the world's lumpy, so you're not going to have a nice smooth curve. But again, we're modeling broad strokes here. If you started with 5 grand and you risked with an EV of 0.4, right, 40 cents on the dollar, your risk is 3%. That's $150 in risk. Your profit expectation per trade mathematically is $60. Doesn't seem like much, right? Seems like a waste of time. That's because people don't have a long-term vision. So let's go fast forward now. You can see that if we just, go through 26 trades here, the account's gone from 5,000 to roughly 6,700. Again, if the EV holds, that would be a reasonable expectation. Notice what's happened to our risk in dollars. Our risk has gone up 50% from 150 to $200. Now, we're making $80 as our EV, right? So if we push this through to its logical conclusion, you can see here, after 253 trades, you'd finally get to the place where you had 100 grand in your account. And then all of this math we've been talking about would work. You would be making about 15 grand a month. And, you could consider dumping your full-time job and replacing it with this kind of endeavor. Okay. So let's think about that. If we assume 4 trades per week, 16 trades per month, it'll take about 16 months to achieve this milestone. Okay. And with an EV of $1,200 or so per trade, assuming an average of 16 trades per month, that puts your income above the 15 grand nut, to 19. So you're doing really well. So that's kind of a little bit of a slap of realism of what it could take. You should be very excited to see that it's certainly possible to go from a small account within just, a couple of 16 months to actually get to a place where you could quit your job and switch over to trading full time. And again, I want you to not be rigid, because these results will go up and down. Things are lumpy, but the bigger your EV, right, the better your trade. The more trades you find, the harder you work, the faster you'll get to your goals. This exercise wasn't designed to make some kind of a promise or projection, but instead, I wanted to show you the levers. I wanted to show you how to determine from where you are now, where you'd like to be, how realistic is it that you're going to get there? What's the ballpark time estimate for the edge that you're currently trading? Just the same way that you'd look at any other business. A lot of small businesses, what are the statistics? They don't make money for 2 or 3 years. So you could look that up, but it's, it takes some time to really turn things around. And trading is a business. So think of it like a business, and things will open up for you. So will this be easy? No, absolutely not. But will it be worth it? Well, I think so. Absolutely. So here's really the major question. Are you willing to work hard for a year or two, right? This means giving up watching TV and, goofing off or whatever. You're working 10 to 15 hours a week. Luckily, the markets are 24/7. You can trade, when you're outside the hours of your normal job. But are you really willing to work for a year or two to execute your vision without taking any money out, without spending it, without taking fancy vacations or buying a car or whatever, so that you can compound your account to buy your freedom? In other words, do you have the guts to stick with this and really compound to a level where you can put on a trade that'll cause you to lose 3, 4 grand, 5 grand, 10 grand if you're wrong? That's really what separates the haves from the have-nots. So bottom line, you have to pick one thing and stick to it. You need to implement a consistent approach for consistent results. Nobody's going to start a business without a clear business plan and a strategy for success. Yet again, as like I said, traders will put their life savings into a new trading business without any structure to keep them safe. It's just, it's crazy to me. And it's so hard to watch people, jump into something foolishly and stupidly and blow themselves up, because that's just gambling. And again, people like me out there and Fausto and all the folks here on this panel are the ones who are taking your money, because, we are the casino. And if you're gambling, I'm going to take your money. And you just can't approach the market with arrogance and expect to succeed. So save yourself the trauma of losing everything. If you don't have a plan, if you don't really want to stick with this, if you don't really want to build a skill and truly know what your odds are, you're better off doing something else. Okay. But if you want to do this, it's absolutely possible. Our clients do it, all the time. And it's wonderful to see people break free from the matrix, so to speak, and really get to that graduation moment where they quit their job and are now full-time traders. So what you got to do is stay consistent with your execution. Consistency of approach breeds consistency of performance. So you're going to plan your trading day and stick to that schedule. You need to create a trading ritual so you have a consistent way of approaching your executions. And again, are you willing to put in the work and ride out the lumpy ups and downs to get to your true EV, your expected value for that particular strategy or setup? remember, even a 90% win rate, you're going to lose 10 times out of 100, right? There's no perfection anywhere in the world and in the market for sure. And there's no easy money. There is, however, a way to make exponential returns with the exact same effort in the markets. Think about this just for a second. It takes the exact same amount of work to enter, manage, and exit a trade if there is a $10,000 or a $1 million account behind it. You're just pushing buttons. There's no difference. The only difference is between your ears and in your bank account at the end of that profitable outcome. Okay, so exponential returns is a very unique thing that we have that really no other business has. What other business can you go in, get a salary that's maybe great, and have it grow 10x, 100x over a 5-year period? That just doesn't happen. Well, it can in trading, and it'll only happen if you focus on process and consistency, not performance, because performance actually is the byproduct of a good and stable process as you go towards your expectations. That's a really critical point. Okay, so now you hopefully have realized that if you want to be consistent over time, and long term is key, because that's where you're going to get exponential returns and build an account from wherever you are now to something very substantial, you got to overcome the inherent flaw, which means you have to have a proven process that is specifically designed to beat the payback cycle. And there are 2 ways to beat the payout cycle. And there's the hard way and the easy way. So I spent the first 15 years of my career doing it the hard way, and that's this way here. You organize multiple edges, and this is what I write about in my book, so that you have a number of different approaches that work in many different kinds of markets, right? You got a different arrow in your quiver for each kind of market condition. You then need to measure, track, and graph out all the changes in EV for all edges, because EV is constantly shifting, so you create a moving average for it. And then you'll actually be able to see and analyze the payback cycles as they shift for and against you, so you know what strategies you should be trading, what you should be avoiding in that particular market condition or circumstance. Then you bounce from one trade setup, strategy, analysis modality to the next as you constantly chase the payout cycles. And this is exhausting. It's a lot of work, but it does work, and it does create consistency. And I did it for 15 years. Now, the second way to overcome the payback cycle is something that my current partner and the creator and developer of the methodology that we use, the Market Vulnerability Index, he came into my life about 10 years ago now as a consulting client, when I saw what he had done, which was he had independently discovered the payback cycle, but he had a different approach. My approach was to be good at a bunch of different things and to bounce from thing to thing to thing as the vagaries of the market shifted. Roger's approach was a little different. He utilized a consistent principle-based set of indications and processes which self-adapt to changing market conditions. So you learn one thing and you're left to in this great position where you're always where the market, where the market environmental pressures are, no matter what they are, what the current conditions are, or how they behave. Right? It's self-adapting. It's almost self-learning in a way. And you're not focusing on setups. Instead, you're focusing on filtration. These filters which help you objectively determine which setups are forming in a payout environment, which produces quick and easy profits, versus a payback environment, which produces tough gains, if any, and mostly trades that wallow, struggle, lots of stop outs. Okay, so this approach allows you to bypass all of that research, all those modeling, all the spreadsheets, the constant updates of all the different EVs, all the graphing that you needed to build, optimize, and maintain a consistent edge in the markets. It's the equivalent to running around like a crazy person, pushing the merry-go-round and just standing still and letting the merry-go-round circle by and come back to you. All right, it's awesome. So for the last 10 years, I haven't had to go into the lab and do all that work. And it's made my life a lot easier. I've had a lot more free time to do the things that I enjoy in my life. So the question is, would you like help in learning the robust analysis process that provides you with this consistency you need and want in order to accomplish your trading goals with confidence, and thus avoid the roller coaster trap that keeps you jumping from system to system, and you finally are going to get your consistent results that you've been looking for from your trading? This is exactly what my partners and I at RBJ Financial Group teach to a select group of traders each year. Now, before I tell you details of the program, I want to share some direct feedback from our clients, because I suspect you don't really care about me, about Roger, how we trade ourselves. Instead, you would care about how effective we are at helping others, right? How can we affect change in other people? So this is from Randy. Randy says, "Hello, Masters, Roger and Bo." And Roger Corey, my partner at RBJ. I hope this message finds you both in good health and spirits. One of the biggest past challenges I've always had has been to completely trust and believe in any trading system I was trying out. I've just been burnt too many times, but was impressed that you'd actually trade your methodology live. A lot of what we do is based around live analysis, live interactions. So that's a big part of what we do. And it gives a lot of confidence to people. So anyway, he saw that. I signed up, and you certainly are walking your talk. Your commitment to making sure your students learn is absolutely unparalleled in this industry. You're covering every aspect required to transform inconsistent traders into consistent traders. Kudos to you. And so he was, giving us some of his results. Took 20 trades, 19 winners, 0 losers. He had 1 break even. He made a bunch of ticks. But what I'm most proud of is that his overall trading experience was the no stress express. So many people approach the market with white knuckles and gritted teeth and high stress, high blood pressure. It's just not necessary. So I love freeing people from that negativity so that they can actually enjoy trading. It's like doing a crossword puzzle instead of trying to get slapped around with a wet noodle all the time. This is from Victor. Victor trades. He's a professional windsurfer in the Canary Islands, and he trades to basically pay his bills while he works on his windsurfing career. So pretty awesome story. Fun fact: with the results I've got from having the sessions with Bo and you on my real account, with the percentages I've made, I've paid the expenses. So basically, by doing these sessions, they have paid for themselves. Haha, that's just awesome to see. Then we've got this from Alex. Alex is an airline pilot. Also, I'd like to add that I'm really loving this approach to learning how to forecast the markets. You guys are absolutely correct. This is what I've been searching for. This is the approach to trading that I want to develop and master moving forward. It has provided me a newfound confidence and optimism in believing that I will ultimately be able to have consistency in my trading once and for all. So thank you, thank you, thank you. Thank you for teaching us these skills and principles. You guys really are changing people's lives in massively positive ways. Sincerely, Alex. And that's the fuel for why we do what we do. I mean, we could go off and hide in our ivory towers and trade and make the money we needed and kind of walk away from things. But there's honestly, after 20 plus years of trading, it's boring. Boring as can be. And this keeps me motivated, keeps me excited, keeps me engaged. The high that you get when somebody removes themselves from the matrix of their cubicle farm and becomes a full-time trader is just so sexy. I love it. So there's a wonderful symbiosis here where we're able to help people, and they're actually able to help keep us juiced up and engaged in the markets, which is pretty boring after a long period of time of doing this. This is Michael. He's from Australia. And so he was a bit frustrated with some of the quiet markets when he was available outside of his normal working hours. He said, it amazes me how much fun forecasting is when you can apply it to a market that's actually moving. Previously, I would practice forecasting and try not to fall asleep when doing it. So he had switched to futures where there was a little bit more movement. From Forex, I believe is where this is coming from. I have recorded 1 loss and 1 break even over the last 15 trades, and I can not only see this continuing, but also I see a lot more trades coming my way. Thank you so much for your help in getting me where I am. I know I wouldn't be able to do it without you. And then Sarah is a gentleman who was had sort of finished his work career. He was driving Uber and working on learning how to trade. And he wrote to us on his 1-year anniversary. Just completed my 1-year anniversary since getting the 3D Apex system. I have celebrated with a short session with Roger Corey. Thanks, Roger. Here are my trades since then. All micro, NQ, and ES. Ka-ching, 19 out of 20. Not 1 loss, 1 break even. You've seen a pattern here. It's a very high probability methodology. When you can forecast markets, you then have the ability to choose what kind of experience you want. Do you want really high probability trades, which are less off, they come on less often, but are very high probability and low stress? Are you more aggressive? Do you want to trade more often? You can decide what you'd like to do. So the question then is, are you interested in a very intensive, hands-on online trading solution? Our experience shows that people tend to drift when they're on their own. For this reason, we don't really, we don't have sort of static courses and things. And we've really, for the last 10 years, have focused our work on very high-end, very intensive mentoring, which is based around live interactions and real-time market forecasting sessions, right? We're working virtually in the way that you might expect if we had, I don't know, an office someplace that you could come into. Luckily, we have all these wonderful distance tools, which we're using right now, which allow us to share screens in real time and look at, do trade reviews and all the things that we do. Our core mentoring process is a 12-month program. And because we work with people so intensely, we want to really enjoy the folks that we work with. We want to make sure they also have the right attitude and that they're going to follow through. We're very committed to them. We want to make sure they're committed to us and to themselves, most importantly. So our program is by application only. It's not for the masses, and it has a pretty strict set of minimum capital requirements, and also an in-depth evaluation process before a candidate is accepted into the program. So I've tried to leave space here for some questions. There's no way in an hour I could give you all the information, proof, and details that you'd need in order to make an intelligent decision about investing that kind of time and money. So what we've done is we've put together kind of a market manifesto to describe what we do, as well as a 5-day free training on our breakthrough process, which has just tons of proof elements and descriptions. And that's all available for free at marketforecastingacademy.com. And also, by the way, I think that's up now. On the page, you're going to see a video which shows how we forecasted the Corona crash. Once you grab your copy of the manifesto, which is free again, just go to marketforecastingacademy.com. One of the videos that's in there in the 5-day training shows how the process that we use keeps people safe again ahead of nasty market surprises. Because remember, no market can crash or even just put in a substantial correction without the environment being conducive. So we can see that, and you get a heads up. It's very valuable. We've saved people a lot of pain and suffering in this Corona crash. So just think about if you still have your money invested in stocks, you've been riding this up and down in your retirement account. How valuable would it have been to have known well ahead of time and be able to move into cash, out of harm's way? Got a lot of friends and family I've been able to put into that lifeboat, and they they kind of gave me some guff, and because don't forget, everything's supposed to be perfect in the economy, and then all of a sudden the bottom fell out, and now they're very thankful. So again, it makes me feel really good. And if I didn't mention it already, this proprietary method of analysis that we have is really a filter. And so it's agnostic to setup or strategy. It enables you to take any setup or strategy that you've invested in or developed yourself, and you can transform that into a consistent performer, because you're going to be able to pick out which instances of that setup are occurring in a payout or a payback environment. And this really is an A to Z solution. So if you don't have a strategy or setup, if you're just coming into the market because the crash has kind of shocked you into realizing that there's this skill set out there, and if you learned it, you'd be able to predict these things ahead of time, that's okay too, because we will teach optimized strategies for entry and exit in the training as well. Okay, so now with this training, because of how careful we are and with who we work with, we can guarantee that this will be the last trading solution you'll ever need, because it's self-adjusting, it's dynamic. You're never ever going to have to worry about looking for the next new thing in your efforts to stay ahead of the markets. So we can guarantee with this process, there's never a version 2.0. We never have to update it. It's been static for the last 10 years. We've seen lots of different market environments in those last 10 years, and the performance levels have stayed, within the similar range of results. So you don't have to worry it's just going to suddenly stop working for you. This isn't a gimmick. This isn't a strategy. This is a skill. This is a real bona fide skill of how to objectively, through data and measurement, accurately analyze and forecast market conditions, direction, and high probability turning points, so that that skill will faithfully serve you for as long as you'd like to trade. So if you're a self-motivated and driven trader with a good work ethic, I'd love to offer this to you. If you go to marketforecastingacademy.com, you can get access to this complete training and solve your struggles with inconsistency once and for all. It's not going to take too much time. The market manifesto is not terribly long. Highly recommend you go through it. And then it follows up 5 days of free training, which show you a lot of good proof elements, a lot of forecasts, a lot of description about how this works, why this works, and what's different about it. If you go through the 5-day training and you think this is a good fit, then we'd love for you to fill out an application, and we'll get on the phone either with myself or with Roger and have a one-on-one conversation about where you came from, what your goals are, and if it's a good fit for us, then we can help you learn to forecast market prices and gain that confidence and accuracy in your trading. So that's what I got for you here. Awesome. We got about 10 minutes for questions. Let me go find the question area and let me see if I can answer some questions. I'm sure that some things that have popped up here. All right. Let me take this back here and put that up so you can have that URL. All right, let's see. I'm scrolling back here. Make sure I didn't miss anybody. All right. All right. Is this recorded for review later? Yes. These recordings will go out. Yeah, the Market Forecasting Academy.com is the URL. People are asking what the cost of the training is. Well, it really depends on the person. We have a bunch of different options. We deal with people from, 7, 8 figure accounts down to folks who are learning to trade. You got to have some capital. You got to have some willingness to invest in yourself and not have that investment hurt you. We're not going to take money from you if that's going to basically be your trading account. So, it's not cheap, but you're getting 12 months of very hands-on mentoring. At the end of it, you're going to be a market forecaster. You're going to have the ability to see what the market is likely to do next in a way that's really remarkable and unique.
Hey, Bo, it's me. Just want to jump in here really quick and just kind of say something. So, people don't understand, and, we do the same thing here at Cyber University. We're trying to explain to everyone that not everyone's really qualified to trade. And I said, that's okay. And, unfortunately, there are other, I'm not looking to bash any other schools out there, but some people just like to here's a course, here's 800 hours of videos and go knock yourself out. And one of the things I really appreciate what you said, and I hope everyone can understand it, and maybe you can explain it again, because sometimes they need to hear from multiple people, but why would you interview somebody before you train them?
Well, in our case, we literally guarantee their success. So we're not going to work with somebody we can't help. Think of us like a doctor, right? If I'm a heart doctor and you come in with an ingrown toenail, I can't help you. That's not what I do.
But he wants to. But no, that's saying wants to. But another person says, "Oh yeah, I could do it. I got a license." You know what I mean?
Right. Yep.
And
I think honestly, and Fausto, you're in the same boat where you really care about your people. It's not just a burn and churn meat factory, which a lot of these places are. I mean, how many people have we seen come in, make a bunch of promises, become fairly dominant in the industry and then blow themselves up spectacularly because of shady business practices, being shut down by the FTC just happened. I mean, these fly by night people put up a good front and they have a lot of nice fancy marketing, but look at people who've been around a long time. Look at Fausto, look at me, look at other people in this industry who've put some time into this. We've learned the hard way that there are certain people that just plain don't do the work. I don't know if you've had this experience, but I in the past have sold newsletters and things like that were login based static products, and the people would pay a couple $1,000s for access. It's horrifying how few people actually signed in and went through all the videos. So by being in a mentorship, by being in a live trading room, like I know you do, Fausto, like, what we do with all the trade reviews that we do, we hold people accountable. We are constantly, telling them, do not suffer in silence. If you're stuck, if you're frustrated, if you're having difficulties, reach out to us. That's why you paid us. That's why we're here. That's why we don't work with 10,000 people a year. We work with a very, very small select few, because we really want to get into a relationship with that person and get them from, whatever their past experiences have been, and, break them through to the other side. One of my, some of my favorite clients are people who've been struggling for 5, 10, 15 years even, and they've tried everything. They're smart. They haven't gotten it. And if you can kind of hold their hand and sometimes, push them a little bit, get them outside their comfort zone, then you'd be surprised at what they can achieve. And oh my God, if you have somebody who's been fighting the market for 10 years and you break them through, just the joy, the childlike excitement and joy on that person's face is just so cool. You just can't You can't really describe what that feels like to break somebody out of that that jail of inconsistency. So anyway, that's why we do it. We're picky. Plus, the other thing too is we do this for for our own enjoyment as well as helping others. So do you every time I see somebody who's in my trading family, and we really do think of ourselves as the RBJ trading family, if I go, oh geez, there's that guy again, then I've screwed up, right? I want to be going, oh, there's somebody who has a problem I can fix. Ooh, there's somebody that I enjoy talking to, so that's our reasons why the interview process is there. Again, if you have a conversation, it's not going to cost you anything. That's another nice thing about what we do is, the information is free. If it's a good fit, we've opened the door wide, we've rolled out the red carpet. Reach out to us. We'd love to have a conversation with you, but it's not going to be easy. We're going to hold you to task. It's going to take some work. It's going to take some effort. It's going to take some consistency, and we'll get you where you want to go. But we have to have the confidence that person has that kind of, oomph to actually follow through.
It's just like it's just like some business owners out there, and I always kind of remind everyone how many people have have employees, and like, damn, I should have got rid of that guy a long time ago, or I shouldn't have hired him before. And the next thing you know, you finally get rid of him, and then you get, I don't know about where you are, Bo, but over here in New York, you don't live too far from me. But then now you get someone filed unemployment, and it's like, wait a minute, this guy filed unemployment after 2 months. He worked for me, and now I got to pay for the next. The next thing you know, like, well, hopefully he gets a job, and the next thing you know, it's like a year later, he's still on unemployment. And he's like, obviously, I didn't do my due diligence. So my point is this: is that some of you business owners, I'm bringing this up. That's why you really have to do your due diligence before you hire someone, just like training someone, because it's not for everybody. And that's why I wanted Bo to come on and kind of talk about it, because like Bo mentioned, we've been around for so long. I've been doing it for 25 years. Bo, I think you've been doing it for over 20 years, almost as long as I have. And when you could last through the crashes that we've last through,
how many of them? Like 3 or 4 now.
Yeah, I mean, look, the financial crisis, the internet bubble, 9/11, all these. I mean, going back, I mean, even 95, I forgot the name of that crash, but there was another one, the flash crash. People don't realize it. So the thing is this: when you surround yourself with good traders, you become a good trader. But I just thought one of the greatest things that you mentioned, because I mention all the time, is the biggest things everyone's got to be careful of. Be careful of clickbait that you find on like YouTube and Facebook. Be careful of being in a room with 1,000 traders, okay? Because I don't understand how someone can even learn something being in a room with 1,000 traders, other than they just racking up whatever they can. Listen, I know people like the chaos, but you want to do it right. You're gonna have to pay for it, but you also got to be interviewed. That's really what it comes down to it. But with that said, Bo, listen.
The other thing,
any last minute things, whatever. But thanks for coming.
I just gotta, appreciate it. Thanks for having me. It's fun to kind of reconnect, and you'll have the same perspective. How foolish is it to weasel, about some $300, $600, $1,000, thing where it's just like a book or a course or whatever, when you're not, when unfortunately most people don't open them or actually use them. First of all, number one, so it makes you wonder why they bought them. But also, do you want a cheap brain surgeon? Do you want a 2-for-1 boob job? Right? You get what you pay for. So when you have somebody who's willing to open up and really get into a relationship with you and really experience that mentoring, and Fausto was talking about, I would do the events at the expo. They were live trading events. People were actually standing there trading live in front of a group. It takes a lot of balls to do that. It takes a lot of confidence to do that. Those are the people that you want to be involved with. They're where you want to be. They're showing you why and how and what it takes, which is often a little bit different than the fantasy you might have. And different people have different fits. There's plenty of room for great people in this industry, and there are a lot of them out there. So Fausto, you're one of the good ones. Thanks for the opportunity. I've enjoyed it. Anybody who wants information, it's all there for free. Marketforecastingacademy.com. If you're a good fit, we'd love to chat with you. Take care and enjoy this market crash. I'm telling you, the crash hurts a lot of people, which is unfortunate, but it is just a bonanza for the active trader. So it's a neat time to be involved in the markets, and make sure you get your piece of it.
Thanks a lot, Bo. And you be safe out there, okay? And
you too.
And now what I want to pass on, let's make sure, Steve, I see you logged in. Steve Bigelow. What's up, buddy? Could you hear me loud and clear? Let's turn on your mic and make sure everything could see if
Can
Steve
you hear me?
Steve, you there?
Yep, I'm here. Can you hear
All
me?
right, Steve.
All right. Fausto, it's been a long time. Good hearing from you again.
It's great to see you, Steve. It's always a pleasure. And another old famous presenter, mentor. It's been around for just as long as we've all been around. Before let me just make sure we could share your screen, Steve. There you go. Perfect. All right.
Whoops, now I lost the chat box.
There's a little, it would happen at minimize, and it's somewhere on your screen. There's a little box somewhere, and then click on the right and you can bring up the chat.
Yeah, okay, hold on. Well, where did you go?
It should be on one of your 15 screens.
Yeah, I've got the main screen up now. Where's my chat box?
It should be, there's like a little 2 double lines on the right-hand side. You have to click on it, and then you'll see chat.
Oh, there's chat. Start a new chat. No, I don't want to do that. I can see you. All right.
All right, good to see you.
Darn, I'm trying to find the chat because I like to have people ask questions as we go along.
Well, there's like a little toolbar that is on there. Do you see the toolbar?
I see the toolbar up on top.
Move your mouse all the way to the end of that toolbar. You got like 3 little dots.
Okay.
You click on that, and then up on top, you'll see the word chat.
There we go. Okay.
Good. All right. So anyway, let me introduce, who here knows Steve Bigelow? Just really quick. Everybody knows Steve Bigelow? He's been very well known. Yep. Scott, Will, you've probably heard him so many times. I mean, I know Steve for so many years. We've done many events over the years, and we basically run our same type of trading room. He's got a great style. I have students have taken his classes, and listen, everybody has their niche. And, that one important niche is the most important thing. And that's what Steve is very well known for. He wrote many of the books. He's been a trader on the floor. He knows it. And he knows pretty much everything about trading in general, especially, probably have a lot of good questions to ask him about what's going on with the coronavirus and everything else. But, without further ado, let me pass it over to him and let him pick up where he left off. And guys, just listen very carefully. Steve, like I said, you're going to get a great content out of Steve, what he's about to talk about it. Like I said, I wouldn't have any of these presenters if you're not going to learn, you wouldn't get anything out of it. And he's definitely someone you definitely want to listen to also. Thanks for listening. Steve, stage is all yours.
Okay. Thank you, Fausto. Welcome, everybody. One of the first questions is, has there been people out there that haven't seen some of my presentations? Obviously, N for no. I'm doing day trading because we're in the process. We're going to have a weekend day trading session on how you benefit from what the candlestick signals are telling us. And it's also based upon the very good entry strategies, not so much just for day trading, which is a huge advantage, but if you're swing trading or even long-term investing. Usually when we do big training sessions, they put me first because candlesticks are like the bread and butter, the ABCs of really analyzing charts. So I started out in candlesticks 40, I hate to think how many years ago, but I always tell people back then I was learning all the candlestick signals I could because I was greedy enough that I wanted to know everything everything that was going on with candlesticks. And unfortunately back then there was nobody else using candlesticks. So I always tell people I didn't have anybody to go to get a second opinion to see if I was doing things right. The only time I was getting a second opinion was when I'd go to the doctor. I'd say, "What's wrong with me?" And he goes, "You're fat." I said, "I think I want a second opinion." He goes, "All right, you're ugly too." So what we're going to do is day trading, and there's 12 major signals. There's 50 or 60 candlestick signals in the candlestick universe, but we've narrowed it down to 12 over the years. Those are the 12 that you're going to see all the time, and they're going to produce the high profit trades most of the time. I say probably 99.9% of the time. So I tell people, don't waste your mental time and energy trying to learn all of them. Just learn the 12 major signals. And then I've written 3 books on candlestick analysis. Easy thing to do is just go back through and browse through the other ones occasionally, just so you recognize when you see a signal come up. So the most important statement of candlestick analysis is that the signals are the accumulative knowledge of everybody buying and selling during a specific time frame. That time frame could be a 1 minute, 5 minute, 10-minute combination if you're day trading, or a daily, weekly, or monthly if you're a longer term investor. I'm a swing trader, so I'm using the daily charts. So the 12 major signals boil down to that all you have to do is learn the 6 bullish signals and the 6 bearish signals. Those are going to give you more trades on very simple scanning techniques. Simple scans will find more trades than you'll ever be able to handle. So each day you're going to have a supply of training or of signals. So not only do you have a supply, but you can go through a very simple cultivation process to see which ones are the best. So one of the first things that we know about day trading is there's two strong day trading functions. One is a day trade, that you're going to go in for the day, that you want to be in the right position and be in and out for a day trade. Meaning, if you're in a market like this where you can't depend on a price move to continue into the next day, you probably just want to find the good ones you can make money on a day basis. The other is the intraday charts, which again, candlestick signals are the accumulative knowledge of everybody buying and selling for a specific time frame. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute combination. So we're going to kind of look at those. But we really are looking for those high probability trade setups. And those high probability trade setups are from one very simple premise, that investor sentiment is the most reliable function of price moves. I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So the Japanese rice traders have given us 400 years of evidence of what the signals look like. So not only do they show us what to look for as far as the graphic, but they also explain what the investor sentiment was that created those signals. When you have that combination, you've kind of have a grasp on what price moves are doing based upon somebody that might have 50 years of trading experience. Now, we also use an indicator that very few people use. We call it the T-line. And the T-line is the 8 exponential moving average, and it has Fibonacci characteristics, meaning it acts like a natural support and resistance level of human nature. So here's the most powerful screen in this whole presentation, that if candlestick signals are the graphic depiction of investor sentiment, and the T-line is a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful high probability trade setup. So very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. A kicker signal, one of the 12 major signals. You stay long until you see that sell signal and a close below the T-line. That combination, because as you can see, there are sell signals in here, but they don't confirm that there's been a major change of investor sentiment. So if you get nothing more out of this, just that simple indicator, the 8 exponential moving average, we call it the T-line, short for trigger line, and it works in both directions. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. There is truisms in candlestick analysis. One truism is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you're in the overbought condition, which in my case, I use stochastics, any stochastics above 1233, my stochastic settings are, well, you just said that, 1233. So if I see a sell signal in the overbought condition way away from the T line, we have a doji rule. It's going to move in the direction of how they open after a doji. That means we're taking profits right here, because where do you think the next likely target's going to be? Back down to the T line. Or where do most people sell? These are the basis of candlestick analysis is just human nature. Where do most people sell? They panic sell at the bottom. Look how far away you are from the T line when you start seeing buy signals right on the 200. That gives you, if you've been short, that tells you it's time to start covering your short and going long. I always have to tell people, this is not rocket science. This is just, you don't have to be a sophisticated technical analyst. All you have to do is see what the signals are and where they're occurring on the chart. So first of all, anything we do as far as what type of day trade we're going to put on is we want to see which direction the market is going. Now, we called the bottom because here's one of your strongest signals. That's a morning star signal, also with a kicker type gap up and a close above the T line. So the simple rule is if you see a candlestick buy signal and a close above the T line, you're probably in an uptrend. Also, the next signal is what we call a doji sandwich. So we've got a morning star signal, which is one of the 12 major signals, followed by a doji sandwich, which we call a morning sandwich or a McMuffin. This is a very powerful reversal. So we were buying right here when all the talking head experts were saying, oh, we're going to go for a double bottom. This isn't the bottom. We were buying like crazy because this is your strong reversal signal. This is your J hook pattern, which told us our next likely target was going to be up here at the 50-day moving average. The green line is a 3 EMA, the 3 exponential moving average. A whole different topic, but it becomes more effective the further away you move from the T line, and it provides a little bit more comforting confirmation that if the 3 T line comes up through the T line, it's confirming your signals. So we were buying Zoom. And if you're even day trading Zoom, there was 2 factors. One, we had buy signals. There's our doji spinning top right off the 200-day moving average. Stochastics in the oversold area starting to come up. Closed right on the T line. If it opened positive the next day, what was it telling us? It was telling us it was confirming the buy signals and telling us the T line was not acting as resistance. You could be buying this on a bullish day trade. Or we know the doji rule, which is very simple. The doji rule says it's going to move in the direction of how they open after a doji. So if they open positive, we're buying immediately because the probabilities of this day right here being the same as this day right here basically says you have a doji sandwiched in between. That is a very high probability trade setup. Why? Because human nature works the same way. So the doji rule, very simple. A price or a trend will usually move in the direction of how they open after the doji. Look what was happening on Amazon. There was our best friend. The best friend signal is a doji followed by a gap up. Then we had a doji opening positive here. Just puts us in the right place at the right time. Now, a lot of people say, well, shoot, I don't want to be buying a stock that's already moved that up that great. You do if you know what's happening based upon human nature. Same thing on Peloton. Doji rule. If it opened positive, this day right here was probably going to be the same magnitude as this day right here. So if you're kind of concerned about sitting in positions for more than a day because there's been so many days that you see like this, up, down, up, down, up, down, can't really get a grasp. But once you start seeing the signals or patterns, you get a much more clear indication of what's going on. Yes, should have mentioned, don't be afraid to ask questions while we're going along. I'll try to talk fast so we have plenty of time to take questions. We were watching this one. This one was yesterday, Codex. You could see the wedge formation. This is what we call a double doji setup. What were we looking for today to see if it was going to open positive? That's because we know if it opens positive, it's doing a double doji, and that today's trading would be the same as this trade right here. There's our doji sandwich or our McMuffin. Forgot which one this was on. Oh, MLSS. I forgot to put the title up here where we could see it. But that would imply that if we saw a McMuffin, a morning star signal followed by a doji sandwich, a close above the T line, and a close above the 200, if it opened positive the next day, you could be buying with a high degree of probability that you're going to get a good day trade out of that. This is what we call a bobble breakout. A bobble breakout is a J hook pattern. A J hook pattern looks like a J hook, but it's more defined in that you can see exactly where the failure was when it failed at the 200-day moving average. And where did it move back to? Right smack dab on the T line and did a bullish harami. What's a bullish harami tell us? Tells us the selling has stopped. Where can we be buying with a high degree of probability you've got a good trade? Right here. Because if it breaks out through the 200, what type of pattern do we have? A J hook pattern, which we know wave 1 and wave 3 are going to be the same. And where do you think everybody and their brother is watching? They're watching to see what's happening right at the 200. We can be buying here and getting out somewhere up here during the day. So Riot, oh, I didn't even check to see what Riot was doing today. Same scenario. And the qualifying indication that you've got a bobble breakout potential is when they failed at that level, look where they moved to, right back to the T line. Now, right back to the T line statement is relevant because nobody has the T line on their charts. When it starts trading up through here, we've got extra evidence that the J hook pattern bobble breakout is about ready to start. Anytime we can see a pattern, this is what we call a fry pan bottom. Where's the breakout level? Right about where the pattern starts. We know if it opens positive, we can be trading positive. When it trades positive, what's that tell us about this big fry pan bottom pattern? That if it opens positive the next day, we can still be buying on a day trading basis. Now, my rhetorical question always is, do we always get big, huge price moves like this? Definitely not. But the probabilities of being in a big price move like this based upon pattern breakouts is extremely high probability moving in that direction. Are there other shorter time periods to use together with a daily one? Yes. And I'll show you that here in a minute, George. And again, it becomes more relevant to go to a shorter time frame. Look where our T line is and look where the price is. That may be where we go to a 10-minute chart to see what's happening. So if I've got something like space, yesterday closed right on the T line, what would we want for a confirmation? A positive open and start trading positive. Well, I think space opened right here and immediately started trading off. So what did that tell us about the strength of that move? You didn't do it because it didn't break out. We bought DEAC today because there's your bobble breakout. We could be buying as soon as it opens positive because we knew the probabilities was that it was going to trade positive. HDNP, I didn't check to see what this one did, but there's your bobble breakout setup. So very simple, if it opened positive, then you wanted to be buying because that would tell you your J hook pattern, which is much more defined by the bobble breakout, was going to give you a high probability trade. So when we're looking for day trades, meaning we're going to sit in for the most of the day and then come out near the end of the day, we want to see what the market direction is doing, which we can do very easily because the candlestick charts are not based upon any trading entity. It is the graphic depiction of what's going on in human nature. So it works for indexes, stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. Then we can look to see what the pattern or signal setup is, and then we look for our open price confirmation. Not a difficult process. How many bars do you watch before you decide if open positive or negative? None. If I see a pattern set up, Dwayne, and it opens positive, that means the probabilities of it confirming that pattern is extremely high. And I often get asked that question. How many, that exact question, how many days, what percentage does something have to move to confirm that you're in an uptrend? And the answer is 0. If you see a candlestick buy signal and it opens the next day confirming the buy signal, we're buying immediately, meaning we want to see it open and start trading in the direction that we expect. So there's always the question, well, what if it opens positive and immediately starts trading lower? Well, you watch. You don't have to jump in on minute 1 or second 1. We will sit and watch. I would rather be 12 cents, 80 cents, $1.10 late, but knowing that the probabilities are pretty strong that the price is moving in the direction we expect after that pattern setup. So if we're doing intraday trading, let's see, in most cases, the prices goes back after the breakout, and your position may be closed by the stop loss, even though you place it just after the T line. Should we wait for the second breakout for this reason? Or you wait for the end of the day to see where it actually closes. So the logic says if you see a candlestick buy signal, I'm just going to pick out an example that it closed right on the T line and opened positive the next day, and then after trading positive for a little bit, it starts pulling back, you give it to the end of the day because the signal told us that there should be a change of investor sentiment. Doesn't mean it's going to immediately shoot straight up, but the probabilities are that the eventual trend will be up. So intraday trading. First of all, we want to know which direction our trading entity is, in this case, the stock. So Netflix, we know, is expected to move in this direction because of our breakout, wave 1, wave 2. Look at our little Morningstar best friend signal. That means we can go to our 10-minute chart and look what the 10-minute chart looks exactly like a daily chart or a 1-minute chart or a weekly chart. So we could be buying right here. How long do we stay in this day trade? Until we see a candlestick sell signal and a close below the T line. What do we see happening right here? Doesn't close below the T line, doing a J hook. Where do we close out? When we see our doji in the overbought condition and it starts trading back below the T line or closes below the T line. This is not rocket science. Investor sentiment works the same way time after time, year after year, century after century. Or if you come back into it, there's our doji sandwich after a long-legged doji. Closes above the T line. If we're buying right here, how long do we hold? Well, look what happens when we get back up on our 10-minute chart in the overbought area. Doji hammer or hanging man, doji hanging man, one of the 12 major signals, and a close below the T line, we're closing out right here. When we close out right here, what's our next criteria? Well, we've got candlestick sell signals and close below the T line. We can start going short until we see candlestick buy signals on an obvious level in the oversold area. Prices move the same way time after time. There's your big evening star signal and a close below the T line on lean hogs on a 10-minute chart. You can go short until when? You're in the oversold area. You start moving away from the T line aggressively. You start putting a stop right here because you are in the oversold area. When it comes up through there, where do you think the next target's going to be? At least back up to the T line. If you're buying down here and it goes through the T line, where do you think it's heading to? The next major resistance level. Where do you take profits? Probably right here. live cattle on a 10-minute chart. This is what we call convergence analysis. Look at all the things you can analyze to tell you this is probably a place to be buying. There's the bullish harami, which is in Western terminology known as the inside day. Tells you the selling has stopped. And where did the selling stop? Right smack dab on the 10-minute chart. What confirms a bullish harami? A positive open the next day. We're sitting in the oversold area. So you got a bullish harami right smack dab on the 50-day or the 50 moving average. It opens positive, closes above the T line. How long do you stay long now? There's your evening star signal and a close below the T line. You close out the position. The YMs, if you're trading the indexes, look at your bearish engulfing signal in the overbought area. Where do you start shorting and knowing that the downtrend is starting? On the 10-minute chart. As soon as it starts trading below the T line. How long do you hold this? You might stop out here. You might buy here, but you close it right back out when it doesn't go in this direction and maybe go short again. Now, to kind of confirm that, I don't know whether I did it. No, I didn't do it. But if you want to get further confirmation of what your signals are doing, look where your 10-minute chart did a bearish harami. Does a candlestick technique work in a flat market as well, where the distance between the stop loss and the, let's see, RL is very short? No, what the candlestick signals do is they work, but what they're telling you, if you're looking at a market trend and they're moving up and down above the T line and below the T line, what's that telling you? It's telling you there's no great support, I'm read your word, no great market direction. It's telling you there is no market direction. What we're looking for is, what is the trend direction? If it's moving sideways like this, it's telling us it's moving sideways. We don't want to be trading right here. Where's our next buy? Right in here. So if I'm looking at a potential sell, there's our bearish harami in the overbought area. Again, this is the 10-minute chart. And look at the pattern that you can see. There's your J-hook pattern. So if you're buying here, a candlestick buy signal, bullish engulfing, close above the T line. Look how far away you've moved from the T line, a bearish engulfing. You might be closing here because where's your next target? Back to the T line. What do you want to see? See if it's going to hold. In this case, I should have pointed out that the red line is our simple 200-day moving average on a daily chart. The blue line is a 50-day simple moving average. And the reason we have those on our charts is because every major money manager around the world uses those moving averages to make their decisions about what's going or what they're going to do with their portfolio. Then we've got the 34 EMA, works reasonably well as a support and resistance level. The T line, the 8 exponential moving average, and the 3 T line, the 3 exponential. Where do we find T line on a platform? If you go to your chart fade, just like you would any other moving average you put on your chart, all you're doing is putting on the 8 exponential. So if you're putting on the 50 simple moving average, then you go back up and put the 8 exponential moving on. It's just a moving average. So if I think it's reversing here, I can get a little bit quicker view, I think, using the 5-minute chart. Say, whoops, I see a shooting star. I see a bearish left-right combo. Did you say the 3 EMA? Yes, you can, yeah, the 3 EMA is just kind of a confirmation. It's this little green line that works more effectively the further away you move from the T line. And it also adds more confirmation that when you see a sell signal in the 3 T line coming down through the T line, that gives you a little bit more added confirmation that the selling has started. So very simple trading technique. I use the 10-minute chart as my bellwether. If I think things are turning around, I flip to my 5-minute chart. If the 5-minute chart is telling me there's a change, then I can go back up and say, up, yep, it's probably selling off here. And then when would I start closing my position? Probably right in here someplace because of the 5-minute chart. Where would I go short? When the 10-minute chart was confirming that it was staying below the T line. Crude oil on a 10-minute chart, there's a bullish engulfing. I can make a good quick trade in something like this because where was I anticipating the next target to be? Right here. So if I was buying down here, I was going to watch to see what happened here. What happens up here? You start seeing sell signals, you go ahead, you close out the trade. And if I want to get in a little bit quicker or get quicker confirmation, there's kind of our little bullish pattern set up on the 5-minute. This is what we call a T-line crunch, where they crunched the price. They couldn't close the price back below the T-line on the 5-minute chart, and it crunched it right up through an obvious resistance level, the 200. Same scenario. You stay long until you see a sell signal and a close back below the T-line. So here's our trade today. Remember, Codex was doing a double doji setup. There's very simple rules. It's going to move in the direction of how they open after a doji, especially after we see a double doji setup, especially after we see a wedge formation, especially after we see it's come up through the T line and not coming back down, and it opens positive. We're buying immediately because what's it telling us? That more than likely the magnitude of this day, which is what's going on right now, or when I did this chart an hour ago, that today's trading was probably going to be the same scenario as that trading right there. And what does that kind of imply? That if this candle is the same magnitude as this candle, what's it tell us about our wedge breakout? That we've broken out. So we're looking for that good day trade, or if you're a swing trader, it's going to tell you there's probably a lot more upside after breaking out of the wedge. How do we get a T line again on a chart? Just put the 8 exponential moving average. Usually you have a place where you can set up your indicators. If you go to moving average, then it will ask what do you want to put on it, and there'll be a box that shows what day or what time frame, and then there'll be another box where you click on simple or exponential. So anyways, now if you want to trade this one, I didn't put up the 10-minute chart, but because we know the probabilities of it breaking out and creating this type of move, we don't know whether this move went up, down, up, down, up, down, but at least we knew the direction that we should be trading. So we're probably trading every time it backs off and does a buy signal, we'd be buying. And then when it hit a peak, we'd be selling, but maybe not going short, just waiting for it to pull back and getting back in on the 10-minute chart. So here's the logic of candlestick analysis. Where do most people buy? They buy exuberantly at the top. So when we saw today where Amazon was trading way up here, what was an alert? Look how far away we are from the T line. What is the normal reaction from human nature? You get a big price move, at some point, people are going to start taking profits. We just want to be aware of when that's going to occur. And again, the alert is the distance away from the T line. Do you use any other tool beyond the candlestick analysis to get confirmation for short or long in order that you will probably find the right direction? Yes, you're looking at it. The Japanese rice traders have a very simple strategy. Now, I'm going to kind of digress here for a little bit. when I was a stockbroker for 8 years back in the late 70s, early 80s in Houston, Texas. And the one thing I discovered back then was that the brokerage firms had no more idea about what made prices go up or down than the man on the moon. They would, their philosophy always was you find a good quality company that had good earnings, good management, you buy it and you hold it long term and you're going to make money. And that you couldn't time the market. Every time I hear somebody tell you that you can't time the market, it's because they don't know how to time the market. The Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in the oversold area, and you see that buy signal confirm, you probably got a high probability that the reversal has occurred. The whole reason we're looking at candlestick signals in the first place is because the Japanese rice traders have identified what a candlestick reversal signal looks like. And not only that, they've had enough time to tell you what the investor sentiment was that created that signal. So the other side of the coin is, if you see a candlestick buy signal in the overbought condition, it doesn't mean very much. If you see a candlestick sell signal in the oversold area, it doesn't mean very much. Logic says, if you see a candlestick buy signal in the oversold area, start looking for a reversal. If you see a candlestick sell signal in the overbought area, start looking for a reversal. I guess the caveat to that is you're going to have some big moves away from the T line. And what does that tell you? It tells you there's exuberant buying. Now, if you get way up here and you're that far away from the T line, there's a very simple rule. You flip to your 10-minute chart. So why would we flip to a 10-minute chart if we're trading on a daily chart? Because even if we were day trading this, how long do you hold this position? Until you see a candlestick sell signal. There's your bearish harami and a close below the T line. So if you bought this today, you're closing out right here. Candlestick signals work the same way time after time. And I tell people it's based upon the most consistent indicator in the world, and that's human nature. So when we're looking at a market trend, or the first thing we want to analyze is what is the overall market trend? Now we can do very simple scans for the stocks that are producing the best buy signals or the best pattern setups in that market trend. And then we can analyze whether any one of those are going to be coming out of a breakout level. That dramatically improves the probabilities that you're going to be in the right place at the right time. Why is a breakout level important? Because if we can see a pattern setting up where it closes right at that breakout level, where do you think everybody and their brother is watching or to see whether it's going to break out and stay above that level? If we know it's a pattern breakout, we can be buying as soon as we see the positive open. And what happens to everybody else? They're waiting to see if it's going to stay up above the breakout level, or they're going to wait for X percentage above that breakout level, which does two things for the candlestick investor. One, it gets them in early. So if it is a profitable trade, they're going to obviously make more profits. If it doesn't work, what is the advice that most investment advisors tell everybody? Cut your losses short and let your profits run. And I've been in the business for 40 some odd years, I hate to say, but I've never heard a single one of them tell you how you cut your losses and let your profits run. Candlestick signals, because it's all based on common sense analysis, that everything you see on a candlestick chart is just common sense investment perspectives put into a graphic depiction. It tells you when you should be right back out of that trade so you can move on to another one. If I'm trading intraday, I'm seeing which direction my trading entity is moving, if it's a stock or a commodity. I go to my 10-minute chart. I see when things are starting to set up on the 10-minute chart. And after that, I confirm it with what the 5-minute chart is. And if I get right down to final pushing the button, I'll look at my 1-minute chart to make sure my 1-minute chart isn't topping out and pulling back, which is kind of going to modify my 5-minute chart, which means it's going to modify my 10-minute chart. So everything I do with candlestick charts, or what everybody should be doing, let me go back a few, is just pure common sense. What's this gap up telling me? We're in an uptrend. How long do I stay in this uptrend? Because of the T-line rule. And again, this is your, I tell people, don't take my word for it. Put the T-line on your chart and see whether it works. If it doesn't work, take it off. But that's the nice thing about candlestick analysis. We know the signals work, or we wouldn't be looking at them hundreds of years later. We know the T-line works because of the evidence that I'll show you a piece of evidence. Look where it opened right here. You'll be very surprised, I guess, is the number of times that a price moves back and hits right on the T-line and bounces back up. Now you got to remember, nobody has the T-line on their chart, so it's hit a natural support level. What is the T-line you use? Is it, no, it's an exponential moving average. With, again, a very basic concept. If you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal to close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it could come back and test it. Whether you're trading off the 10-minute chart, as I mentioned before, I used to trade the E-minis when I was much younger, which wasn't that many years ago. Off a 1-minute, 3-minute, 10-minute combination. You can use RSI also. It doesn't matter what you're using, as long as when you use it, you find that it's successful. I have people say, well, why didn't you try the XYZ indicator? Well, I can throw it on there. And after a couple of weeks, I find it does not improving my trading. I take it back off. As you can see, the charts are very simple. And that's because there's the main criteria for analyzing anything on this chart is the signals themselves. Everything else is a confirming indicator. So when you put all these in order, let me go back one. If I'm looking at a market trend, now again, this is for the presentation today is based upon day trading, finding that big move that you can get in and out in one day. But if I'm looking for a swing trade, my normal trades are swing trades, usually anywhere from 2 to 10 trading days. I'm looking at the market trend. Now, if you've had a day like we saw way back when you had a big, huge reversal and you've got hundreds of good looking charts, how do you find the best one? Very simply, on some of the scanning softwares, you can go to sectors and you see which sector it had moved the best or has the best looking chart. Then you can go to that sector and find which stocks in that sector had the strongest candlestick reversal charts. So essentially, you're putting all the stars in alignment that you're putting your trading funds in what now has turned out to be the best trade setup based upon human nature. Is a T-line as effective on the 1-minute and 5-minute? Yes. Everything that you see on the charts are what they call fractal, which means they work just as well on the 1-minute chart as they do on the weekly, monthly chart. Again, if you go back to the definition of candlestick analysis is that the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. All the other indicators still confirm exactly what's going on in investor sentiment on those time frames. So if I am trading any like lean hogs, I'll look at see what the daily chart looks like. If it's a bullish chart setup that day, I'm going to probably be trading off my 10-minute chart on a bullish time frame and then confirming with a 5 and 1 minute. I'm usually, if I'm my swing trades are usually 2 to 10 trading days, George, which means I'm going to trade off the daily charts. And again, I'm looking for that combination, a candlestick reversal signal in the oversold condition and it climbing up or closing above the T line. That's an extremely strong probability there's been a change of investor sentiment. So a lot of people say, well, what if you see a buy signal and it's doesn't close above the T line? Well, if the buy signal closes relatively close to the T line, I'd rather wait to see if they're going to take it up the next day and close above the T line. I'd rather be a day late, but know that my probabilities have become extremely strong that the uptrend's now confirmed. Do we go to the sector instead of the trend? Do we? No. What you're doing is I'm reading and thinking. What you're doing is the first analysis is, do we know the markets are heading up or down? We can do that very easily based upon analyzing the chart. Now, if there's lots of stocks moving up in the trend, how do we know which ones are the best? Basically, how do we make the best hay while the sun is shining? Then we just go to the sectors and we scan to see which one of the sectors have the best bullish charts. And then once we see which sectors, which again, if we see bullish confirmation in the sectors, what's it telling us? It's telling us the big money is probably buying those sectors. Then we can go to those individual stocks that make up those sectors and scan to see which ones of those have the best looking charts. So again, that's putting all the stars in alignment that you're in the right place at the right time. Do you have a minimum stock price you trade? And yes, my trading universe, Ken, is I want stocks greater than 5 and more than 200,000 shares a day on average. The reason for that is most brokerage firms won't margin stocks below $5. And I know that every time I put on a trade, the probabilities are greatly in my favor that I'm going to be in the right direction. I don't know whether that right direction is going to produce a 3% profit or a 300% profit. I'll know that once the trend starts and it stays above the T line. I want to get into stocks that have a minimum of 200,000 shares a day for 2 reasons. One, when I decide to get in or out, I don't want to have to sit around for 5, 10, 20, 40 minutes to see if they can execute my trade. I want to get in and get out and move on to the next one. Secondly, the more volume you have in a stock, the faster the signals will set up because the signals are based upon the executions. So if you've got low volume, your signals might be slow to set up or diminish. So now that doesn't keep people from doing their own trading universe. And we do have on my website, candlestickforum.com, we've got our chat room open every day. We've got about 200 people in our main room, and we've got about 20, 25 people in our options trading room. And I put out 2 or 3 stock picks every night in a video format, not so that people have picks, but people can read or see the video and understand why those picks were recommended, the pattern setups. And so the chat room is very effective because it's twofold. We got people in there that have been trading candlesticks for years and are very good at finding good trades. So it gives you another supply of trade setups. And two, if you're trying to learn candlesticks a lot faster than trying to learn it on your own, you can ask questions in there and you can get feedback back and forth. So through the years, I've discovered that I want to try to teach people how to use the candlesticks so they can do their own scanning, so they're just not told what to do. They can make the analysis that they can use for the rest of their life. So obviously, if you tell people what to do, if they're not told what to do and they don't understand what they're doing it for, you kind of lose the effectiveness. And I always express it as the kind of the cop standing on the street corner, and he sees this drunk weaving down the street, blows his whistle, pulls the guy over. When he walks up to the car, he looks in the window in the back seat. There's a penguin sitting there, and he goes, "What the heck are you doing with a penguin in your back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." And the drunk said, "Oh, I didn't think of that." Well, the next day, the cop's standing on the street corner. Here comes this car weaving down the street. He blows his whistle, pulls the guy over, walks up to the window, and the penguin's sitting in the back seat. And he goes, "I thought I told you to take the penguin to the zoo." Drunk said, "I did. He liked it so much today we're going to a baseball game." So if you don't understand why you're doing something, you don't learn from it. Are your terminology of candlesticks universal? The signals are, yes. Now there's a couple names of patterns, like the J-hook pattern was my name. The McMuffin was just kind of short for having to say, oh, you got a Morningstar signal followed by a doji sandwich. But all the other signals are Japanese terminology. I don't use the Chomi or Ikomuku cloud because it's not as effective as the T-line. I've been trading all sorts of technical indicators for decades, and the best combination I have found is the T-line and the candlestick charts. Now, I could take everything off the chart, all the moving averages, keep the stochastics, the candlestick signals themselves, and use the T-line, and I could trade very, very effectively. And I say this because when I was a stockbroker in Houston with Kidder Peabody, Cowan, and Oppenheimer, I was the worst investor in the world. But when candlesticks came along, every time I looked at a chart or started learning it, the thing that kept whacking me in the side of the head is, this makes sense. And the more I looked at it, the more sense it made. So it does two things for you. If you understand that the probabilities are greatly in your favor because of candlesticks, it helps you with your discipline, that you start getting rid of your emotional trading, and you don't listen to what all the talking heads are telling you is going on. There's one true indicator that you want to watch, and that's the market itself, or the price moves itself. Candlestick signals are actual decisions, not prognoses or predictions. They're what everybody's actually doing. Do you trade future indices? I don't trade future indices just because I don't have time. I can make enough money trading soybeans, cattle, the dollar. You can trade the indices if you want to. What I tell people, candlestick signals work on everything. It's the graphic depiction of human nature. No, you're not trading the T-line. You're trading the signal, Ken. The T-line is merely a confirming indicator. Oops, you scrolled past me here. Do you trade future? If not, can you apply the same candlestick technique and time frame daily combined? Yes, you can pick out whatever combination you want to use. Some people use an hourly chart and the daily chart. It's whatever time frame. There's other people that want to trade active. They'll use a 1 minute, 5 minute, 10-minute combination. If you're trading less active during the day, you might use a 5 minute, 15-minute, hourly combination. Oh, it took me probably a few months to learn candlesticks. Again, that's because I didn't have anybody around to confer with. You can pretty much learn how to trade successfully if you just learn what the signals are telling you. And I tell people, even if you don't use candlesticks as your primary consideration, if you are following somebody that you like what they're doing, if you put candlesticks on your chart, it's going to even make it that much more clear to see what's working and what's not working. These indicators, yes, Scott, work on any market conditions. It'll tell you whether you're in an uptrend, downtrend, or sideways. If you're in a sideways market and I've got 10 positions on, it might be I have 5 good shorts and 5 good longs. If the market's in an uptrend, I might be 8 longs and 2 shorts. Oops, I don't want to run out of time here. Did you say you choose stocks that have traded on average? Yes, of over 200,000 shares a day. That takes the trading universe down from 9,500 down to about 3,100. And when I do a scan, you can scan for the best trades in less than 20 minutes each afternoon, just by having your preset scanning criteria, and then doing some very simple sorting. What charts do you use? Brand names. Metastock is a good one. We have all our formulas, all our signals and patterns over on Metastock. Same thing with TC2000. You can set up your scans if you're using Thinkorswim, but it's a little bit more cumbersome. But all our formulas are usually on a lot of the Ninja Trader. I think TradeStation has them. This works for options. Remember, options are merely a way to buy stocks. So you're not trading options because of option prices. You're buying options to control a stock that you're analyzing which direction that stock is moving. Can I use the T line alone? I did not see a J hook. Lynette, very simple. Once, and that's what we do in our chat room, is keep emphasizing. And I have a training session every Thursday night from 8 to 9. We go through the patterns, the signals, what the market's doing, what it just gives you enhanced analysis of how to use the candlestick signals. We do the same thing Monday for members, and then the chat room is open all day long. No, or Scott, it's much more, what do I want to say, defined, much more, let me get to it. Yeah, it's 47 buckaroos. We advertise it as an hour, but everybody that comes to these sessions realize that they usually go on for 2 or 3 hours. So we use these sessions to go into detail. And the one thing that we do constantly is the repetition, because candlestick analysis is merely the recognizing the signals and then understanding what those signals are illustrating. Don, we do have trial offers. I have no idea what they are, but if you would email abraham@candlestickforum.com, he can give you much better idea. So this Saturday session for 47 bucks, we always make our mantra that you're going to get a heck of a lot more information than you think, because I go on and on, keep showing examples. We usually start at 9:30 on Saturday morning, and supposed to go to 10:30, but we're usually done around 12:30, 1 o'clock. Yep, there you go. All right. Well, Fausto, thank you for the invite today. I hope everybody got some information. This was the tip of the iceberg. If you learn the 12 major signals, which is your bread and butter, there's about 8 patterns that are extremely high probability trade setups. Again, based upon human nature. And once you see those patterns and you can add the signals to them, again, you're dramatically improving your probabilities. Again, going back to the simple statement, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, which means the candlestick graphics tell you exactly what's going on in investor sentiment. Thank you, Fausto. Thank you, everybody. Again, come join us Saturday. I think you'll find you're going to get a heck of a lot more than your money is worth. And this is not stuff that, this is stuff that once you get it into your head, it's going to be useful for you no matter what trading technique you're using after that.
Steve, thank you so much for coming, Steve. And it's always a pleasure having you on. Listen, the great Steve Bigelow, definitely try him out. Listen, like I told everybody, you can only talk so much for about an hour and you can only learn so much. But let me tell you, I can imagine. I read some books. You learn more. They can take you about a day in a book that you learn, less than an hour just listening to Steve. And imagine what it'll be like being in his room. So thanks, Steve, for being here. In the meantime, guys, what I'm going to do is I'm going to jump in now. I'm going to step in. I'm going to finish off and talk about how to plan for the best stock trade in today's volatile market. So let me just go out there and share my screen. All right, there we go. So we should be able to see it and just get a little organized over here. Get my chat up and my animation, get my little pointer. There we go. All right, everybody should see everything okay. All right, could everyone hear me loud and clear? Just going to pick up and leave off where he left off. Good, good. See you, Pat. All right, good. Loud and clear. All right, good. All right, everybody. So we're coming up to the end of the day. It's 3 o'clock. I'm going to finish up. Like I said, I'm going to talk about how to plan for the best stock trade in today's volatile markets. Hopefully, by the way, all of you guys have been to pay attention and been cooperating regarding about the coronavirus. It's been a really, really serious issue. I live here in Long Island, New York. I'm about 15 miles away from Manhattan. It's a big, big hot spot. We're also a very hot spot, but don't worry about me. I'm doing great. I have no coronavirus. I've been locked up between everyone, my staff. We closed our office back in March. Looks like we're going to probably be stuck here until May 15th, but that's okay. Listen, there's no better place and more safer place than to be here in the Cyber Group trading room in our nice Cyber Expo. And you know what? You're hearing people, what's so sad? You're hearing so many people like losing their jobs and, furlonged and worrying about getting the stimulus package and everything. And you know what? It's horrible to be in that situation. It really is. And I know it's so desperate and, and we're giving this money out. And that's what makes the United States such a great country. We care about our people here. But at the end of the day, that money's going to run out. And I mean, I don't know about you, but I can't wait for a stimulus package. I don't need the stimulus. Give it to somebody else, the stimulus package. But the thing is this, people do need it. And you know what? We shouldn't have to worry about needing it because now you have one of the greatest opportunities to trade the market. And you can see from the great presenters that we have talking about trading, how great it is, how much we love it, how things worked out. And let me tell you, I've been there. I've done that. And you know what? With the history that you heard, how long a lot of us have been in this industry for, listen, I started when I was 22 years old. And let me tell you what I've learned as a 22-year-old, and I think every presenter here will even, said it themselves. We all failed. We failed miserably. And you know why we failed? For the same reason why we teach. We were the ignorant ones in the beginning that went out there and learned on our own, and unfortunately, 99% of the people today do that same ignorant mistake. And you know what? Like everybody here mentioned, all the presenters, Bo, Steve, the other Steve, myself, we end up doing what we all do. We end up working for somebody, you know? And you know what? It's not easy to go work for somebody because number one, now you got to listen to them. You got to have to work. Oh my God, you got to work. And then you know what? We don't got to split the profits and this and that. And I know nobody likes that. It's like, you know what? It's like getting education. It's like, well, they got to pay for it. This, that. Listen, if you're worrying about paying rent or paying your fair share, you should not be trading. You should not be trading because what everything that you learn, what every presenter had to say, I mean, we took the time of our day to come out here and train you because we not only that we want you to be part of our team, but listen, not everybody really requires. You heard Bo what he said earlier. We interview everyone we train. You know, we interview also everybody we train also. You know, I'm not going to pretend I'm a foot doctor and then pretend I'm a brain surgeon because it pays good money because you need one. You know what I mean? So, and everyone has their own niche. But let me tell you, for doing it for so many years, I love it. I've done very, very well. And just a couple of things, just tell you a little bit about me. I know some of you are students here and listen to me so many times that I'm glad you guys are here. But listen, CyberTrading University, and like everybody else, it was born because for the same reason we were all saying it. We all run our own trading room, and we're looking to teach you guys how to give good content to room. But to do that, you have to learn how to play the game. And, you know, and we're all very, very close. We're like a family, you know, and we really want to make sure we all make money together because that's the ultimate goal. You know, I hear stories, you know, and like I said, I'm not here to, hit a nerve with certain people and bash companies. But you know what? I'm just going to tell you point blank. You know how you know when you're dealing with a right person? Number one, who they do business with, as in any brokerage firms endorse them, you know, because they do a lot of credit checks on all of us. Number two, how many times have you seen them on other partners? And how many times have you seen them? How long they've been in business for, you know? And you know what? Listen, I know there's some great testimonials out there, but you know what? What might work for that person might not work for you. So these are things you got to look for. So I just want to kind of just, put that, out there so you guys can at least know why we have these presenters here and why you guys got to make sure you find the right person other than not getting caught with somebody that's willing to sell you, 800 hours of videos and you're not even going to watch it. All right. Now, what we're going to learn right now, ladies and gentlemen, is I'm going to talk about how to follow smart money. Now, my expertise and what I'm very well known for, and you see that everybody has their little niche, is I am a tape reader. Okay. And a tape reader is what's called a tape reader. We read the tape. Basically just watching supply and demand. You heard of scalp trading. I'm a scalp trader. I'm a day trader. I'm a professional day trader. That's how I was trained. I don't know anything else. I do swing trades. I do investments. I do teach that. But you know what? You want to be a good swing trader, you damn well better learn how to day trade first, because it's what happens over the course of the day that trickles into a swing trade. So we're going to talk about all these great things. I'm going to show you why 90% of traders struggle in today's markets. I'm going to show you how to read charts, keeping it simple, and, once again, once you understand that, you can implement other things, but you just got to know how to play the game. So we all very familiar about what happened with the market. Let me tell you, it has been, you heard some of the presenters. We unfortunately, we hope for things like this, but, don't call us heartless, but unfortunately, this is our job. This is what we get paid for. You pay firemen to go put out a fire. Okay. When the fire comes and he doesn't show up, I'm like, well, I didn't think I had to put out a fire. I love the benefits. I love this, or a police officer or a doctor. Nobody said they signed up for the virus, the coronavirus, but these poor nurses, first responders, God bless them. They're doing the greatest job ever, but they didn't, they signed up for this, but they didn't think it was going to be this bad, but it's going to happen. And they got to do what they were trained to do. And that's why they're good at what they do. But could you imagine that you're paying a nurse all this money, all this work, and then they don't show up because they're like, oh, wait, I had to do this. Oh, I didn't sign up for this. Of course you did. You were trained that in school. And that's why they're there. That's why they're there. But you know what? When people are out there trading right now, they look at this and like, I didn't sign up for this. Then what are you doing in this market? This is what we do all day. So you have to know how to play the game, because when you play the game, then you benefit from these big rallies that we get. I mean, think about it. You have witnessed the biggest point drop in the history of the stock market, but it goes twice. You also seen the biggest gain in the history of the stock market. Well, now, I still have people today like, you know what? I was down 30% and I'm still breaking even, whatever it is, even though the markets were at 2,300 right now. I mean, but you just got to know where to get and where to get out and spot it. So what I'm looking to teach you right now is how to follow the big dominator market makers, follow the brokerage firm, because that's how I was trained. Okay. Listen, we are the ants on the floor. I don't care, like it or not. I mean, you know why? Because you're just trying to get the crumbs. There are brokerage firms out there that are moving millions and millions of not only dollars, but shares. They're moving billions of dollars. You hear these politicians always bash, we got to go after Wall Street. We got to go after Wall Street owes us. We bailed them out. Wall Street. Why'd they go after, the farmers? Why'd they go after the lumberjacks? Why Wall Street? Because they know the Wall Street makes a lot of money. So don't look at it in a bad way, but why not join them? Why not join? Why are they making so much money? Why do we have to work so hard and they're not? What are they doing differently? They're not doing anything differently other than they got into the business. And that's what you're trying to do. So let's go out there. Let me teach you the style, what they do and how they do it very, very well. But I have a question for all of you. Let me just make sure this works. Okay. Because Zoom's been having some issues with this. I'm going to do a quick poll question. I'm going to launch a poll really quick. And I don't know if you guys can see the poll, but could you guys tell me what kind of trader is everyone? Just want to do a quick poll question here. Just check on the box and just let me know what kind of trader is everybody. All right. I'm going to share the results with you guys too, by the way. There's a lot of you guys don't be shy. I always say this, but don't be scared to answer this question. Nobody's going to make fun of you or rat you out. Honestly, if you can't answer this question, you should not be trading. You really should not. And if you're not trading right now, just say which one you have an interest in. Okay. That's all I really get concerned about. All right. So I'm going to share the results, and it looks like we have a lot of options traders. Okay. Now listen, I just spoke to a student today that became a day trader. He bought an option course, and he told me, he says, Fausto, I bought this option course and paid $3,000 for it. No one called me. Nobody, they gave me a bunch of videos and I'm losing money and I can't even follow up with people on it, right away, that should be a red flag. So one thing I want to tell everybody, if you're ever going to learn from someone, they should have a phone number on their screen and make sure you're able to talk to somebody. But he learned a very valuable lesson. He goes, you know what he learned? He learned that options wasn't for him, because he ended up, the 3,000 was nothing to him. It was a lot of money, but he's like, but just the time that he lost, not knowing it. So regarding if you're an options trader, you could be a good options trader, but you have to learn how to trade the stock first. Okay. Remember, it's the movement of the stock that makes an option move. Now, futures, listen, I don't trade futures. There are great futures instructors here. I know a lot of good ones, but just be careful. Futures are very, very speculative. Forex, unless you're overseas and you don't have the luxury of trading the stock market, Forex is okay. We obviously all invest, but I'm an actual stock trader. I just like the day trade. It's just a lot more easier and a lot more controllable, because when you see things like this, and the stock goes from 28 down to 4, by the way, did you guys hear about this stock, Lucan Coffee? Everybody heard about this stock, LK? Bill, you did. My God, we made a killing on this stock, a killing. By the way, this happened in pre-market. This thing just went from 28 and it was shortable and went all the way down to 4. And it actually ran back up to 10. It's halted right now, but we day traded. This is actually, fellow trader Kent Dole in the room. He made like 35,000 trade this stock. He made more than me because I only made 13,000. But this stock was just a great, great trade. But how do you find these stocks? We do a lot of trades in pre-market, and also we do a lot of trades in after hours too. It's not speculative. It's not dangerous. But, you know, these are things that we trade. What happened with it back then, Frey has to say? Well, listen, I don't want to get off our whole thing about shadowing orders, but the kind of, you could do the research. Basically, it's a Chinese copy of Starbucks. That's basically what they are. And I'm not going to get off the subject, but I'm just going to kind of tell you a little bit what's going to happen probably. We all know what's going on with the coronavirus. And we all know, you know, obviously the whole big thing is they're blaming China for it. Well, obviously, you know that a lot of Chinese companies go public in America. And what happened with LK, and this is going to change. I'm telling you, it's going to change. I think a lot of Chinese stocks that are public right now are going to be probably the biggest shorts, best shorts ever, because LK is basic. And after the coronavirus and what LK does, it's going to spill into it. What happened with LK, just kind of repeat it. For some reason, Chinese companies, you cannot audit them. You can audit any stock, okay, that's on the New York, the NASDAQ public company. But if you're a Chinese company, you cannot audit their books. I don't understand where that came from. It is totally not SEC compliant, all right? But apparently somebody let them go public and they kind of let it do. So someone made something on that deal. I don't know if you know that. So anyway, regarding about what's going to happen is that they got busted. An attorney firm said, you know what? They're lying on their books and they're about $320 million short on their stocks, on what they're reporting. So apparently they've been lying on their books. So there was a big short going on. And then obviously the news really did break that they were lying. And that's what happened. And now the stock got halted and it hasn't been open ever since. So anyway, I'm just going to tell you right here first, what you saw what happened with coronavirus and what you've seen what happened with LK is going to trickle down to any Chinese company out there. And if they don't like it, they're going to delist them from the New York Stock Exchange. That's going to end up happening. Now let's get back to trading, okay? Now, listen, that's why we love this game. That's why people love trading. You know, once you know how to trade the game and you know what they're doing, you know exactly how to get in and how to get out. But anyway, let's talk about a WORX. We were trading this stock, and I want to show you how we find these stocks and where we get them. First of all, whenever we trade a stock, honestly, I really don't care what I trade. I really don't. And you shouldn't either. We just want to make money, right? Like, think about it. Like, what the hell does WORX do? Fran says, you know, what happened to LK? You know what? I only know because it was big news all over TV, but some of us, like, I never heard of LK before, you know, or I never heard of, Zoom, ZM, which, Steve Bigelow was talking about it, all these stocks. I mean, all these companies, but there's so many. How do you know what to trade, what not to trade? Well, at the end of the day, what we trade is stocks that have volatility. As a day trader, we just want to make something that has some good movement. We can make a day's pay. And you can see WORK right here was up 34%, traded 13 million shares. By the way, there's a lot of them. Stocks was 66%. LTRBP was 900%. I mean, there's a lot of stocks out here. APDN, that was another fun stock, 20 million shares, 29%. People can't even make 5% a year. How the hell you find stocks that go this much? Well, the thing is this, not all of them are tradable. Not all of them are, you can get in and out of them. And that's the strategy. And I think that's what most people really have an issue. They just say, okay, well, how do you know which one is going up and how do you know which one's going down? Well, it all starts about having a game plan. Okay. You got to know what the trend is and what is the strongest price levels. All right. Now, with the strongest price levels makes buyers and sellers. That's really what it comes down to. So what we're going to do is I'm going to show you what we preach and what we teach, because this is how Wall Street traders trade, is about how to follow the money. Because if you don't follow the money, this is how you become part of the 90% failure rate. Now, there are 3 ways of viewing orders. There's a level 1, a level 2, and a level 3. And there's now also a level 4, which, by the way, let me ask everybody that, just out of curiosity. Does anybody have level 3 access? I'm going to do a quick poll question right now. By the way, if you're a student here, please don't answer this. This is before. Just see if anybody has level 3. Frey says work makes tools and drills. Well, you know what? I didn't even know that. Work probably had something to do with it. I guess like Ferrari, their symbol's race. What they do, they go racing. But I honestly, Frey, I didn't even care. That it was just a great stock that made some good moves. But it's not. But let's look at this right here. Let me end the poll. Okay. Now you could see a lot of you don't have it. And if you said you're not sure, I'll take that as a no. All right. So with that said, you probably got close to about 80%, 70, 80% of people don't know. All right. So let me explain to you. Now listen to me carefully. What you're about to see right now is going to be disturbing, because what you're about to see, I'm going to show you something that is going to blow your freaking mind out of the way. People look at this and they're like, now I know why I was trading backwards the whole time. Okay. So, which by the way, what I'm about to show you too, at the end of this presentation, we're going to play a video of me on NASDAQ doing an explanation. By the way, I'm a guest speaker on NASDAQ's TV show talking specifically about this. Now, understand something. NASDAQ will never have anybody come do presentations. I don't even know anybody they invited as an educational school on it, but they wanted me on there because they know that what you're about to see is something that you need to be successful in this. Why else would they want me on there to talk about it? Because it's their platform. They're the ones. This is what built NASDAQ. NASDAQ was built on this platform. Okay. This is how it all started. The New York Stock Exchange, nobody works there anymore. Okay. That floor, you're going to have weddings and bar mitzvahs there soon. Okay. Even today with the coronavirus, it's all electronic. They copy NASDAQ. So this is how the Wall Street trades. So now let's look at this. Level 1. What is level 1? Basically, it's a ticker. You just see what the price of the stock is trading at. Turn the TV on, put on CNBC or Fox Business. Look at the ticker on the bottom that's running. That's basically a level 1. It just tells you what the stock is trading at. Doesn't tell you who's buying it. Doesn't tell you who's selling it. I mean, it's got some fun information. 52-week highs, average, volume, big deal. That tells me nothing of where the stock is going. Okay. Then back in the 90s, which was pretty big, which just came out level 2. Now, level 2 has been outdated since the 90s. Okay. People say, I get level 2. Oh, what do you mean? I thought that was pretty good. No, level 2 is a modified level 1. Basically, it's just showing you the brokerage firm's best bid and best offer. It's basically it. It's not showing you all the bids. It's not showing all the offers. It's just showing his best buy and his best sell. Well, how does that help me? It worked good a long time ago, but not anymore. Then back in 1997, I actually was one of the beta testers for NASDAQ. They came to us, SOS bandits. I don't know. Any of you guys ever hear the word SOS bandits? Anybody know what a SOS bandit is? John, you did. Bill, you did. Anyone else? No? SOS bandits are the original day traders. Okay. I'm actually one of the original SOS bandits. So I'm one of the original day traders. When I started, there was probably about maybe 1,000 of us. Now there's over 10 million around the world. All right. So I'm one of the original day traders that started. So they came to us and they had a problem. I don't want to go into the whole explanation of how this came to fruition, but back then, we used to use a system called SOS, Small Order Execution System. It was a way how we used to do trades, execute stocks. Back in the 90s and the 80s, if you were a market maker, which means you were the brokerage firm's trader, that was like the most prestigious job in the world. Okay, you were like literally like the president of the United States. Okay, well, maybe not the president, a senator. Okay, because there's a lot of them. Now, you know how hard it is to be a senator. There's only 2 per state. Okay. So only 100 people could be in the whole world have a shot to be a senator. So being a trader, you had a brokerage firm that could have 1,000 brokers, but there's only like a couple of guys that run the whole room. So you could see how very prestigious this job is. Unfortunately, the exchanges realized that brokerage firms were holding them hostage, and it was up to them, and they were only ones that dictated the price. You see, if they weren't a buyer, stock wasn't going anywhere. Now, everybody remember what happened in 1987, the crash? Well, what happened back then, everybody just thinks of the crash. Well, I could tell you what really happened then. The brokerage firms pulled their order. You would call up a guy and you would use your phone and say, hey, Goldman Sachs, I want to sell Rite Aid at 14.57.59. Goldman, hello? You call him phone. He hung up the phone. Call him again. Goldman, you there? Goldman, I want to sell you Rite Aid. I see you on the bid. Hello? He hung up the phone again. That's what was happening. So nobody was honoring their quotes. So what happened, they had to build the system where you didn't have to call it. You had to make it more electronic. Back then, that's where the word ECNs were born, electronic communication network. This is what we trade on, okay? An ECN allows you to become a market maker. And I was one of the beta testers for NASDAQ to help build this system. I'm like, my God, thank God. Now I don't need to call the brokerage firm. I could actually post a bid and I could execute him without even calling him. If he likes it or not, he's going to get executed. So now think about it. How many times have you done a trade, right? And you're doing a trade and you're looking at it and you're like, I don't understand, like, where'd they all go? Or I had a student the other day just tell me, when I sell a stock, where does it go? Who buys it? Well, now you're getting to see the real true data. So that's the power of Total View. Total View now is going to show you all the bids and all the offers. And with the direct access broker, you can execute these orders. And that alone is about 50% of the failure rate right there. So listen, you had some great speakers and we talk about strategies, but let me tell you, before you can implement any of this stuff, you have to learn how to place a trade and know why you're getting in and getting out of it. You know what? I like to compare it to driving a car, right? I got 3 boys. I got one in college. I got one that's driving. I have an 11-year-old. I just started teaching my 16-year-old how to drive. By the way, anybody here remembers or has any kids trained a kid how to drive? Let me tell you, it's the scariest thing in the world. My wife refused to get in the car. They're like, you got to talk to this kid. He keeps veering to the left. He keeps slamming on the brake. Listen, could you imagine if you weren't there and you just gave him the keys? He would have crashed and killed himself already. That's exactly why people fail in trading. That's why you need to have someone that holds your hand. But let me show you how we're going to use the Total View, okay? So Total View, Book Viewer, NASDAQ Book Viewer, which is also known as Total View, is going to give you 20 times more data than level 2, 100 times more data than level 1. So what you're seeing here in layman terms is you're seeing all the buyers and all the sellers at every single price. That is going to change everything because this is going to make things very simple for you. Now, we got 3 columns. We got orders, we got shares, and we got bids. Whoever wants to buy it for the most amount of money is up on top. Whoever wants to sell their shares for less money is down at the bottom. The same thing over here on the ask side. Whoever wants to sell their shares for the least amount of money is up on top. Whoever wants more money is down at the bottom. So right here, let's implement a chart. Don says, I train my daughter how to drive a standard. Oh, that's pretty cool, Don. Probably a lot safer because they can't use their phone. They always say driving on a standard is a lot better because, then they have to always be occupied. But anyway, I'm going to teach you how to drive standard right now, Don. So here you have a chart, right? Look at OXY. What the hell is OXY? Who gives a shit? Excuse my French. Sorry about that, but who cares? Stock's going down. It's at $14. Down, 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 down. And then right around 8:30, about 12 o'clock, it kind of stops right here around $13, right? And then for some reason, decides not to go any lower. Anybody want to take a guess why? Why would the stock stop at 13, not go to 12, not go to 1250? Why 13? Why not stop at 1320? Why 13? What? Think about this for a second. Tell me in your words, what makes a stock go up? Everyone should be able to answer this question. Dwayne says large buyers. Dina says buyers. Everybody everyone just type that in there so I know that you're awake. I know it's a long day, but buyers, right? Buyers. Everyone just write B. Come on, Mike. What about you? I didn't hear from you. John, Susie, Patel. Come on. Don't be shy. Just say buyers, buyers, buyers. Okay. Now, listen to me carefully, because this is where things are going to start changing your perspective of trading. Do you see any buyers on the chart? You see any buyers there? No, we don't, right? So how do you know that really is a demand? How do you really know? Looking at history, no. There's only one way that you know that that is an official support level, is you got to know, because remember, what makes a support level are buyers. So right here, when we go to Book Viewer and we look on the buy section, hold on, let me get my little, like my drawing line right here, the buy section. And right here at 1301, there is, hell, even down here, I didn't even realize that. Between 13.1 and 13, you're talking about, I don't know, 130,000 shares looking to be bought. Look at this. You got nine different orders, one different orders. You got 140 and 14 orders. You're talking about almost 160 different people that are trying to buy that stock around $13. Now you think about this for a second. Who are you going to trust more? The commentator on TV that has time to be on TV and not trade? The one that sent you a newsletter? The guy that told you to watch some videos, or the buyer out there that's already looking to, that's got a big bid out there? Or me, Dwayne. Thanks, Wade. I mean, think about it. It's like almost like common sense. Like, because think about it. The only way that stock can go any lower, that guy right there has to get executed. Someone has to sell to him, or he's got to change his mind. Now, think about it. If him to change his mind, it's not one person. It's over 150 different people got to change their mind. Okay. And by the way, don't think they're all in cahoots with each other, because that's another thing people say. Oh, they're fake orders. Oh, they're fake. Okay. You think they're fake? Mike, you think they're fake? Okay. This is what I'm going to do, Mike. You're going to come in my trading room. I'm going to find 150 orders out there, making up over 130,000 shares. We're going to use your money. We're going to tie up over $2 million worth of stock, and you tell me how fake it is. Okay. Well, someone said, well, someone else said they're fake. But really? Well, you know what? I was on a panel about a year ago. I literally almost had a complete argument, a huge argument with this analyst, because he quoted me and questioned me. He goes, oh, yeah. Oh, those are fake orders. I looked at him, I'm like, excuse me? I'm like, really? Could I prove it to you? The guy goes, how are you going to do that? He goes, we had a screen up. I'm going to bring up a stock right now. Open up your brokerage account, and I want you to execute that guy, and you tell me how fake it is. The whole audience looked at him, because this guy was very well spoken, very well dressed, works for some big shot hedge fund. And he goes, when he started mumbling, he goes, well, I didn't say they were fake. I'm like, yes, you did. You said they were fake. Did he not say they were fake, ladies and gentlemen? I go, he goes, yes, he did. Raise your hand if he said it was fake. Everybody raised their hand. Well, I didn't really mean they were fake. I'm like, well, they could have canceled the order. They could do spoofing. Spoofing. Oh, isn't that illegal? You think that guy, 140 people want to get fined $1 million a piece for spoofing? I'm like, do yourself a favor. You stick with your, your calculations, your book values and stuff. We'll, leave the trading to us. I told him it was really fun. And I took it really personal, because I deal with it all day long, and it's like, the thing is this, NASDAQ wouldn't want me come and do presentations and tell you how to use the software if they thought you were going to lose money doing it. They invented this platform, and they are so tired. I can't believe that more people are not using it, because it'll make your life so much easier, which, by the way, we got a lot more to cover. So don't just look at this one. We got more to cover. Hold on. Let me clear all drawings. Bring up my pointer back again. All right. Resistance. Let's talk about resistance. Okay. So here's a stock, Peloton. Okay. By the way, what the hell is Peloton doing? I guess everybody's home having fun, can't go anywhere. So everybody wants to get in shape, but Peloton just went public. Things do incredible. So anyway, here's the stock, 32, right? 9 o'clock this morning, went to about 36. Now you do the math. 32 minus 36 is $4. If you bought 1,000 shares of that stock, that's a $4,000 profit in about 3-4 hours? You do that every day, that's $1 million a year. So when you're asking people like, oh, this guy made that much, you know what? They do it. And you know what? Honestly, you don't need 4 points. If you just made 50 cents, if you just took this little piece right here and peeled off 50 cents, there's a $100,000 salary right there. But with that said, let's look at this. This is the $64,000 question. Stock goes up, right? Went all the way to a price of 36, right? Why did it go down from 36 down to 34.50? What prevented it and what stopped it from 36? Very simple. Sellers. Chart doesn't tell you that. But when you look over here on the book viewer and you look for the sellers, welcome to sell section, you got sellers at every single level, every single penny. 1354, 1355, 1356, 57. And a lot of people look at these numbers. They're like, what number, what do I look at? Because there's so many numbers. You don't got to look at them all. You just got to look at this guy. Oh, 14 orders, 43,000 shares. What does that come out to be? About $2 million almost. Gotta be, that's a lot. That's a lot of sellers out there. When most people are showing 1 share, 200 shares, I would definitely be behind that guy at any time, any day of the week. I don't care. You know what? We could be family. We could be relatives. You could be my best friend. And there's a perfect stranger over there. I'd rather listen to him than listen to you, because you know what? If you're going to compete with each other, train Peloton, you're 100 versus 43,000. I'm going to be on his side. Listen, at the end of the day, it's all about team. Listen, I train all types of people in all different industries. I'll give you sports, for example. Okay. Listen, professional athletes, they got friends on different teams, but at the end of the day, we get paid to win. Right. But at the end of the game, as long as we're safe, nobody got hurt, bygones will be bygones. Don't take it personal. You know what? I get paid to be very successful at it. But you gotta know where your competitors are. How about the 1,500 at 35.58? Well, you mean the 1,500 shares, Fab? I mean, but it is, but it's not really like 43,000. It's not a lot. I mean, you're literally like 50 cents away. I mean, is it? It is, but not a lot. All right. Everybody ready to have a little fun? I'm going to do a little test for everybody, okay? Without looking at any indicators, orders, heat seekers, anything. We're just going to look at this chart right here, okay? What is this stock? What's the trend of the stock? And let me actually go out there and actually I'm going to share. Let's do a poll, okay? Is this stock going up or going down? Okay, what's the trend of the stock, up or down? I always do this test, everyone. And I mean, I know everybody knows where we're going with this, if you've been here before, but just answer it. The first thing comes to your mind. First thing, up or down? Just click the poll. One person said it's going up so far. Wow. 94%, 2 people. Everybody's saying it's going down. I am just curious, what in the hell makes you think the stock's going up? What makes you think stock's going up? So, I mean, listen, end the poll, share the results. Okay. If you said the stock is going down, congratulations, you're absolutely correct. You are 95% there of being successful in trading. Okay. That's great. That's great. You just passed the first test. Now, let's go to the second question. When will the stock start to go higher? When will the stock start to go up? Okay, everybody answer that one. What do we need? What's going to make the stock go higher? You got to think about that for a second now, huh? What did we learn so far? Right, John, right? Patrick, Dean, James, Providence, buyers. We need buyers. Do you see buyers on a chart? No, you don't see any buyers on a chart, right? How are we going to find the buyers? is, like I'm on Fidelity, I'm on Schwab. They don't show me this stuff. I'm on Thinkorswim. I mean, like I got beautiful charts. Some of them, and it's so funny, like they all compete and make, everybody's got like better looking charts than others. Oh, this one tells you when it's to do earnings announcements. This one's going to tell you when it's going to do the sales. Listen, that's garbage to me. It's window dressing. Where are the buyers? You know where the buyers are? On the book viewer. So let's go look at the book viewer. So working our way down the list, and we noticed that right around here, holy crap, I didn't even realize there's 2 orders. Between 1150 and 1149, you got close to over a 250,000 shares. That's a lot of damn shares out there. I mean, you got 10,000, 14,000, but you're in the $100,000 league twice within a penny apart. Damn, that's a support level. Or in other words, that's a lot of buyers. That's a lot of buyers on American Airlines. Okay. A hell of a lot more than you're buying. So why are you even going to even compete with that guy? Why would you even, that's what blows my mind. People always ask me like, why do you think you know more than the 250,000 shares out there? Oh no, this stock is definitely going lower. Really? Okay. You're probably right, but let's see if we get through that guy first. Because guess what? It didn't work too well for Mr. Jones. Okay. Because that buyer right there, it went from 1150, that was the price right there. And it shot right back up to 1220 in a matter of what? 2 hours. You bought 1,000 shares of that stock. And guess what? You made close to about $1. $1 on 1,000 shares, $1,000, $250,000 a year. What's wrong with that day? Okay. A lot more than that stimulus check for $1,200 that people got yesterday. So that's trading. Now, we're going to do one more test. Okay. And remember, I can't teach you to be a successful trader in an hour. All I'm doing right now is I'm sparking interest. Okay. Because at the end of this presentation, I'm going to invite every single one of you to come join me in my trading room. And I'm going to prove this to you live in the market tomorrow. Every one of you are going to have the opportunity to come and see this live. Okay. You see, I'm not really a big fan with PowerPoints. I tell everyone because, anybody can make a nice PowerPoint. Everybody can we're looking at a perfect setup. But when you start seeing this move, that's where your brain starts thinking like, crap, who the hell going to even think you're going to compete with these guys without knowing this stuff? That's why I love what I do. Yeah, that's why I love what I do. So let's look over here. We're looking at Norwegian Cruise Line. We all know about the cruise stocks. They got crushed, right? Looking at this stock right here, where is the resistance levels on Norwegian Cruise Line? Anybody want to take a guess? Give me a number. Okay, Pammy, that's a great question. Pammy says, you find it in options. Is book viewer, is it free? Okay, so let me tell you something, Pammy, something very, very important. This goes for everybody. And I want to warn you really quick. If anybody offers you something for free, there's obviously a catch, right? There's got to be a catch, right? Nobody works for free. Like seriously, do you think I deserve to work for you for free? What do I get out of it? A thank you? Yeah, you know what? I got to pay taxes and property taxes. They don't want to hear, but I couldn't pay this month because, I had to work for free for Pam. Pam wanted me, for free. So I'm just giving you a heads up. Every single one of you are going to have to spend some money. And I'm talking like, listen, let me just tell you something. This program from NASDAQ, when I started 25 years ago, I had to pay $1,000 a month for it. $1,000 for this stuff. 25 years ago at a 22-year-old. Okay. Today, you know what it cost? $15, $15. It's like, but can I get it for free? You know what? If you're looking for free stuff, listen, if you're looking to win a free car, a free motorcycle, a free iPad, iPhone, you're in the wrong room. Okay. You know what? Why don't you go out there? Wouldn't it be great to buy something and say, you know what? I bought that Prada bag. Okay. By trading Norwegian Cruise Line, because Fausto taught me that there was a buyer here and a seller there. So the thing is this, go to Craigslist for free stuff. Exactly. So anyway, where's the resistance levels? Right here at $12. That's your resistance. So there's basically your resistance where you're going to get in and out. All right. Norwegian Cruise Line. Did you need a chart to tell you that? Did you need a chart to tell you that? No, because guess what? Everybody else will look at this chart right here and says, but look, but it's going up. It's going higher. Yeah. Let me know what happens when you get up to these 61,000 shares at 70 and 74 different people out there that make up at $12. But the chart says it's going higher. Yeah. Guess what? It went up all right. It also went straight down. You got to have a game plan. Got to have a game plan to trade. Okay. And you know what? You don't have that much time because you only had a couple of minutes until it dropped and went from $12 right back down to $11.40 in about 30 minutes. And you know what? That really would stink. Could you imagine owning the stock, have a nice $1,000 profit, and you just threw it away because you got greedy and cocky? And because you didn't know that you were coming to a big resistance levels, just because resistance levels, last week didn't show that. You got to follow the money. It's what it comes down to it. And then everything else just comes natural. Everything just makes perfectly sense. Makes sense. All right. So I call these iceberg orders. Okay. And actually, if you go on my YouTube channel, look up iceberg orders. I basically kind of did an explanation about it. But basically, an iceberg order is I came up with the word watching the movie The Titanic. You ever very sad movie. If you haven't watched it, I basically cried in it myself too, leaving the movie theater. It was actually pretty funny. Everyone was crying. But we all know about the Titanic. What happened? The most unsinkable ship, most beautiful ship, which is exactly what traders think. They bought the most expensive computer, the most expensive laid-up, the best trading platform, the best indicate, best everything, the best. But they never got one thing. With the Titanic, it wasn't what's on top of the water. It was what's on the bottom of the water. They forgot to get the radar. And it wasn't so unstoppable until it came up to an iceberg and it sunk the thing and everybody died. And that's what happens to traders. Actually, the staff just posted a link up there to kind of explain it. So it's sunk and everyone died. Well, most of them died. So you don't want to blow up your account in trading, do you? I mean, how many times have you done that before? Do you really want to blow up your account? Like, I know people like, I'm sick and tired. I've done this before. I can't figure it out. Listen, if you just get mentored and know how to play the game, you'll finally figure it out what make these things do what they do. Just got to know how to play the game. You got to find those iceberg orders. And that's what I'm looking to do. I'm looking to train people so we could scan the market together, because there's no platform out there that does it. Scan the market, find these iceberg orders, and be able to scalp away and just chip away and make our nice six-figure salary, because it's all about teamwork. Now, I'm almost done here, and I want to just finish up and talk about one last thing, which is about some people think about the fake orders, okay? Now, we're looking at INO. INO right there has a 288,000 share seller at $9. So right off the bat, without looking at anything, definitely resistance levels. I mean, not only is it resistance, there's a lot of orders out there, 20,000, 7,000, 8,000. I mean, we got passed through to 9. This thing is off to the races. Definitely big resistance levels, hands down, without looking at anything. So right away, they are real orders. Now, could anybody cancel an order? Of course you could. Could anybody, get executed? Of course they can. Well, it all starts with something called time and sales. How many of you guys using time and sales? Well, I got people say, oh, it moves so damn fast, I can't watch it. Okay, well, listen. Time and sales. Stock went through 9, blew through 9, and went to $10 in about 2 hours. How's that even possible? Well, somebody bought it from him. Somebody said, holy crap, I need this stock. There's 280,000 shares. Buy. Just buy it. Buy it. Well, how do we know a guy bought it? Look at the time in sales. 3,000, 1,000, 1,300, 1,400, 12,000, 16,000, 16,000, 13,000. Just constant. Guy was getting chipped away. People just buying it from him. Buy. Get a lot of greens and time in sales. That means a lot of those sellers are getting executed. That's your confirmation of transaction. And that's what made the stock take off. So, and you know what I'm talking about. How many times you see a stock hit a resistance level and like, oh, that's a resistance, not going to break it. And then all of a sudden it does a breakout and you're like, and you're trying to figure out what the hell's a breakout? You know, you hear everyone's got like a whole philosophy behind it. Oh, a breakout means when Haley's Comet crosses with the 200 moving average, and then you got an SMA, and that causes, it's going to cause a breakout. Please do me a favor. Just guy got executed. There was a seller out there. He got executed. You see the time in sales. That's what rolled up the stock. Simple as that. Okay. No rocket scientist. Now, here at Cyber Trade University, these are things that we're looking for. We're looking for breakouts. We're looking for stocks that we could short, but we have to follow the money. That's what it comes down to. By the way, here's another one. Penn Gaming. Stock went down, right? Had a tough time breaking at $9. Hit it. Went back up to $9.50. Hit $9. Went back to $9.50. Has to do something with the 75,000 share buyer out there. But what ended up happening, the buyer got executed. Didn't work out too well. Now people say, oh, it's a double top, a triple bottom. Listen, I know what those mean. End of the day, look at everybody on time and sales. Red. 46,000, 2,000, 16,000, 11,000. Guess what? Somebody sold it to that stock, that guy. Actually, not that one person, several people that were out there that made up that order. And that stock went from 9 down to 750. Now, you know how depressing that is? Think about that. You bought a stock, you're like, and by the way, this is all in one day, 12 to 750. You know, and you're like looking at it like, oh my God, I thought it was a buy. I was reading the reports on it. I love the company. You know, it's greatest stock. I mean, I know it. I do business with them. You know, like everyone's like, okay, great. Now you're taking it personal. Unfortunately, we have no heart when it comes to trading. You know, anybody know anyone had a house foreclosed? You know, or a neighbor? You know, it was whatever. Someone's losing their house. You know, happened a couple of times. Okay, I mean, like, and like you're like, oh my God, that's such a beautiful house. I wish I could buy it for my daughter. You know, and now he's stuck. He's whatever, and somebody's going to steal it. And you don't know who's going to live next door. Why don't you just buy it yourself? Well, I feel uncomfortable asking him. You know, I mean, like, it's so sad he lost his house. You know what? He'll probably he knows he's gone. He knows he's going to lose it. Why not you buy it? Why somebody else make all the money or have some contractor come in there and knock it down and build this monstrosity and destroy your block? I mean, is that what you want? Trading's the same thing. My point is this. Don't take things personal. It's just a game. Just know how to play it. It's only business when it comes down to it. By the way, anybody know the definition of business? I know we have a lot of business people in here. Anybody know the definition? Actually, I failed this in college. What's the definition of business? People are writing long guy. I'll make it easy for you. Making money. It's 2 words. Making money. That's the definition of business. All right. So I want to finish up here because we're running out of time now. I want to give you guys the opportunity to help get registered and come into my trading room. Now, I'm just going to tell everybody, every single one of you do need a mentor. Every one of you. I don't care who you are, and you're probably going to need a few. Okay? If you're looking for free stuff, I'm just warning you right now. And please remember, you can always remember this every time you lose. Fausto told me this. If you're looking for free stuff, you're going to blow up your account. You're just better off just start interviewing stockbrokers. Okay? Every one of you need a mentor. Okay? And for me, what I'm looking for is I'm looking to people to enjoy life, have a great time, do things I always wanted to do. You know, trading is a great job. You are your own boss. You could come and go whenever you please. I mean, look what's going on with the coronavirus, for crying out loud. Look what's happening. People are stuck at home. And you know what? They're having the government trying to pay companies to pay their employees so they don't go on unemployment, so they can still keep them. Though maybe this is going to go away. You know what? That's great. Greatest country in the world to do that. But what happens if it doesn't work? What happens after 2 months? You think you can keep paying people going to work, keep printing money? It doesn't work that way, guys. And you think your company's going to want to keep you? You know what? The hell with them. I'm not waking up in the morning and driving in a car and have to answer to somebody and put my wife, my family at risk. They say it's going to go on for about another year and a half. So it's not a matter of if, it's a matter of when you're going to get the coronavirus. So you know what? I'll just sit home and trade myself. And I'll just have fun trading these companies. I'll enjoy life. What the hell I need to deal with that BS for? So the thing is this. Will, you're more than welcome. So the thing is this. I wanted to show you why we've been endorsed and why I do presentations for more brokerage firms than any school in the industry, and why I've been in business for 25 years. I want to give you guys the opportunity to come and join me in my professional trading room. And you know what? You saw, we all got trading rooms and stuff like that, but I started the very first one. Actually, it was me and Candlestick Forum were the ones that first started. Me and Steve Bigelow. He does a little bit. We both have different, same kind of style. 70% of what we do is the same, but you know, I specifically for more of a scalper, and I think you should, you know, you want to see a little bit. But the big thing is this: I want you to come into my trading room. Don't judge me on the winners. I want you to judge us by how we get out of these positions, take losers. You see, my biggest thing is I don't teach people how to make money. And when you come into the trading room, you're going to see, I don't tell anybody what to buy and sell. So you could probably think like, what's the hell coming in there? My job is to teach you how to stop losing money. That's what we teach. But when you come into the trading room, what you're going to see is you're going to see what other traders, how they think for themselves. That's what you got to focus on. You see, listen, I'm a 12-time world champion. I beat every school in the industry, and big deal. Okay, great, whatever. That was, you know, what does that do for me? What does that do for you? Puts a feather in my cap, put 12 feathers. But that doesn't make you money. I figured that out 15 years ago. I'm like, that doesn't make these people money. What makes you money? If I could teach you how to make money. That's the big thing. You don't got to be a great player, you know, to be a good teacher. You got to be a good teacher that could teach players how to play. And that's what makes us all different. So I want you to come in there. I want you to look at the traders. I want you to see if they make money. And then you can make a decision and say, wow, if Lita from Canada, you know, a 9-year-old grandma could learn how to make 6 figures, well, how can I? Why can't I do it? But you got to learn how to do it right. So this is the promotion. $9. Okay. This is the cheapest deal you're going to get today. The $9, all it does, listen, I don't make money at $9. I lose a lot more money than making it. The $9 just tells if you're a real person or not. You know, we can't just invite 200, 300, 400 people. If you come into our trading room, you're going to notice I don't have 1,000 traders in my room. I don't want 1,000 traders. You don't want to be in a room with 1,000 traders. Okay. It's just chaos. What are you going to learn? We don't invite every Tom, Dick, and Harry in the room. Okay. We consult everybody. We call everybody. We want to make sure this is for you. Okay. Why would I want to have, you know, listen, I have a 5-star Google rating on Google for a reason. And also almost 5 stars on Facebook. Why? Because we don't invite every Tom, Dick, and Harry. Listen, if we know you're not going to make it, look what Bo said. We interview before we train you. Forget about the money. The money's irrelevant. Okay. We think nobody works for free, but at the end of the day, we got to know if this is for you or not. So for $9, this is what you're going to get. You're going to get our trading room for a whole week. You can get 3 daily market meetings, a morning and afternoon watch list, a crash course on day trading, your own personal education advisor, weekly Q&A. Look at all the stuff you're getting for literally $9. Okay. And as a bonus, The first 20 people that register, I will personally give you a coaching class. Me, that's right. I'm going to talk to you on the phone. Now, why would I want to talk to you on the phone? I'll tell you why. I need to find out if you're qualified and ready to do it. You need to convince yourself that this is what you want to do. And then we'll talk about it and say, okay, let's see how we can do this. Because at the end of the day, I'm really in the business to find traders I could teach to find iceberg orders, because there's no platform out there that does it. So if you're getting it and you're catching along, you're not going to ask me where to, how much it is. You're going to just ask me where to sign up, because you get it. You're like, I tried this. I tried Forex. I tried it. Nothing works, but this actually makes sense. But you don't know until you get in there. So that's all I ask for. $9. Go out there. You got the link right there. I think we just posted up there. Just click on that trial and we'll get that up and running. All right. Now, does anybody have any questions? Thank you very much. I appreciate it, Jill. Thanks a lot, Will. You're more than welcome. Tell me you had a great lesson. And listen, I know it was a long day, and I know you had a lot of great presenters. I think we probably lost somebody. And by the way, this has been recorded. You guys can watch it later. I don't know if you're going to have the opportunity to get the free coaching, but you're more than welcome. Dwayne, I have one Super Bowl ring, NFL, and I'm looking to win another one in the stock market. Dwayne Starks, there you go, everybody. NFL Super Bowl. He's actually in the trading room, right, Dwayne? Dwayne, the only problem you're going to have is that Dwayne, the only problem you're going to have now, because Dwayne's actually now just became a student yesterday, is that you're going to wish you should have listened to me 3 years ago. I knew it wasn't the right time. He says, Fausto, because Dwayne, I do a lot of education for NFL players. I try to teach NFL players how to trade, because a lot of them, after football, they got to do something, and finance is really, a lot of them want to get into. So I've trained a lot of NFL players. You're going to see a bunch of them in the trading room. But I told him, I said, listen, the only problem I'd have people tell me is like, damn it, I wish I met you first before I got involved. And guess what? It's never too late. It's never too late. I will, Dwayne. I will, Dwayne. Thanks a lot. I appreciate it. It was great talking to you. By the way, anybody else have any questions? Guys, $9. Start off with $9. See what the trading room's about. You're going to see this live. You're going to see total view. You're going to see level 3. By the way, I'm going to show you something called level 4. If you think this is good, wait till you see level 4. That is going to blow your mind out. You're like, holy crap. I thought this kind of told me. Wait till you see that. The other one's going to show you orders, how long they've been out there for. It's crazy. Crazy stuff. Yeah, we got a bunch of people. Just a couple of shout outs really quick. Why not call a couple of people? Frank Zula, just got yours from Pennsylvania. Brockway, Pennsylvania. Who else we got here? Lance from Buffalo, New York. All right. Suzanne from London, England. Welcome aboard. Joseph, no link to click on. You should see it in the chat right there. Just click on the trial right there. You might have to copy and paste. I don't know why. We got to look in why the staff CTU, why it's not doing a hyperlink. I don't know why it's not showing a hyperlink there. By the way, you could also call 877-70-CYBER. Can actually talk to somebody at our office. You could also email me if you have any issues. FaustoCTUcorp.com. All right. Any other questions? Markets closed. Wow, we end up being up 33 points. You see, we know what's great about trading. Like, I'm in cash, right? There's no urgency. You don't have to worry about, like, we trade this morning. We did great on some stocks. Well, it's a big deal. There's no stress. Got 2 voicemails trying to sign up, Dana. Yeah, you know what, Dana? Unfortunately, all my staff is working from home. We have our phone systems connected. We actually, because of the whole coronavirus thing. So if you have any issues, best thing to do is just go online and register then. All right. Probably they're taking orders online. We only have a few people that be able to take orders. There's over 100 people in here. So do you close the trades the same day or hold them overnight sometimes? Okay. So that's one of the biggest call in the rules you don't do. Then once you hold it overnight, you're not a day trader. Day traders do not hold positions overnight. unless it's done into design and unless you can afford to lose all that money tomorrow. But no, we're always in cash. Absolutely. Especially in today's markets. You think you want to hold positions? Shoot, I think we had like a big rally and then we tanked. We had another rally and we tanked. It's like, it's a trader's dream right now. Who else we got here? Hurrah from Alberta, just got your registration. Who else we got here? RJ from Arizona Temple. I don't know if you could see it right there. Just got your registration. I'm using my phone instead of the computer. Any other questions, by the way? Any other questions? All right, looks like people are just registering along. Okay, so what we're going to do right now is we're going to play a video of Total View, again, a demonstration I did on NASDAQ. So you guys can watch it and you kind of see a little bit about, I'll go in a little detail about Total View. Also gives you credibility of knowing that what I'm showing you, the exchanges really want you to learn this stuff. So watch the video in the meantime. And then with that said, when you register, just to let you know, everybody's going to get, is going to get an education advisor. They're going to call you. You're going to set up an appointment. They're going to walk you through the dashboard. They're not going to sell you anything, guys. Don't worry. Nobody's going to sell you anything. We just want to make sure that what you're doing is the smart decision, because trading's not for everybody, and that's okay. That's a good thing. That's okay. But let's find out what the truth's all about. Let them walk you through it. You're going to have a couple of videos to watch. You're going to understand the lingo that we talk about. And then with that said, you'll be able to finally get into the room. Now, listen, we start at 8 o'clock in the morning. If you're West Coast, I know that's early. Don't worry. The afternoons, we do the afternoon meeting. We have 2 meetings. I like pre-market specifically. I make most of my money in the pre-market, but you could trade the afternoons. We do trade the afternoons. We do 2 meetings. We commentate live in that room. So there's definitely a lot of action that's going to go on, but just make sure we're able to talk to you, because you know what? I'm telling you, people always ask me, I can't hear anything, or, what is this? And, you know, and like, all we kept on saying is like, well, did you talk to the education advisor? Oh, why do I have to talk to him for? I'm like, because we want you to have the best experience of what CyberTradingVerse has to offer you. You got to remember, you're making a career out of this. And if you're going to be part of a team, you got to make sure you're making the right decision. It's not about the money. It's about your time. So make sure you make that right choice. So we're going to play the video right now. For everybody here, thank you so much for being here. I'd like to thank my presenters for being here. You know, they didn't have to be here, but they took the time out of their day to be here and do this event with you. And I'm just very thankful. And we do these events all the time. So please come back. We have different presenters all the time. You're going to learn something. The best thing you can learn, the cheapest thing you can learn, is getting yourself educated. If you think education is expensive, try ignorance. Okay. And we don't want to be there, and we don't want to go there. Thank you so much for listening. Stand by. We're going to play that video.
Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, New York City, we have Fausto Pugliese. He's the founder and president of Cyber Trading University. We're going to take a look at how traders are using Total View. And Fausto, it could not be a better time to have you in with us at Marketplace, because with everything going on, the volatility we've seen in the market since you were with us in the middle of February last time.
That was pretty crazy.
Traders are asking themselves, what's the bottom, what's the top? But as a day trader, you can kind of get an inside look when you're looking at a single stock.
What it is, Jill, is that, thanks for having me again. And yes, when it comes to day trading, people realize that what happens over the course of the day, which trickles down to a swing trade and to a long-term investment. And my phone's been blowing up. People keep asking me, Fausto, is this the bottom? Is this the bottom? Because we're looking at the market all day. And honestly, this is how you really know when it's the bottom. When you have the worst of the worst of the worst news and just constantly all negative stuff, and the market's not going any lower, that's when you know it's time to buy. So as you see, like, a lot of bad news keeps coming up, and then obviously you saw what happened yesterday when they lowered the Fed rate by a half. It took for a big decline, and all of a sudden the market's up with about almost like 900 points so far. So and there's still a lot of bad news that's coming out with the coronavirus and everything else, but that's really when you know when you hit the bottom. So for some of the listeners out there that really missed the boat when the market had a big rally. You almost hit 30,000. You know, these are the opportunities. You know, honestly, it is like the same thing I saw back in 2008 when we had the financial crisis. So once you start seeing all the bad news, things start backing up, start going up.
All right, let's take a look at our example here today. We're going to look at ticker symbol MRNA, NASDAQ listed, of course. What are we looking at? Where's the levels that you're looking to sell?
Okay, so listen, what is mRNA? You know, I keep bringing up stocks, and people are like, what does this company do? It doesn't matter. We're just here to make money. The main goal about Total View is you have to understand how it works, how to know where the buyers and sellers are. It's all about supply and demand. That's why it's such a great tool. So we're looking at a chart right here, and we're looking at the stock right here. And the first thing people notice is like the stock's going up beautifully. Nice. Look at the stock. Started this morning. It's at 25.80. It's at 28. Is it going higher? Now the goal is, why does the stock keep breaking out? It hits a resistance, it comes back down. It breaks the previous resistance, keeps going up. How do you know it's going to keep breaking higher highs? And that what we're going to do this time is we're going to bring a video so you all could see exactly what it's like to see in the real market conditions.
All right, so let's move along to our next slide here. That's exactly what we're doing. Let's take a look at Total View. I'm going to let you take the reins. Tell us what's happening here.
Okay, so we got like a little minute video here. So we're looking at some real time. And the key here is time and sales. These are the transactions that are taking place. We're looking at level 2. Level 2 is basically people get for free, but it doesn't give you the depth of data as Total View does. Now, the key here is that you don't see that many sellers out there. You're just seeing the best bid and best offer of that exchange. But you'll notice how the stock keeps going higher. What we need to focus on is where you see the big sellers. And you're looking for big orders. You got 51 different orders out there, right around 28. Things are going so quickly, I try to slow it down. So right around $28.50. So that is really your resistance level. So when you're looking at a stock going out, going higher, you're going to say, is the stock going to break out? So you see it's coming up to this guy right here really quickly. You see it's coming up. It's coming up to this person right here. So 70,000 shares, 5,000 shares. So it's going to come up to that seller. Now the goal is this: is that guy going to get executed? Remember, you have 100 share sellers, 300 shares, 1,000. But you have a big order out there. You want to see if that guy gets executed, and you want to see if that's how it breaks out. Remember, what makes support and resistance levels is buyers and sellers. So you got a seller out there. So we're coming up to that seller right here. Now the goal is to look right here and see if that seller gets executed. And you see it's coming up to the seller, and boom, the guy gets taken out. It's actually executing it. Boom, 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 boom. Look at that. See all those trades actions? It took the guy out. Now look how fast the stock goes up. From 250, we're at 260, 270, 280, boom, like that, as quickly as that. That's why it's so important to know where the orders are, know where the resistance, and see if the guy gets taken out. Now, when we get to the next slide, look at it. We're already at 2880.
Yep, and you can see these 35,000.
Which is exactly. Now, this is the next order. Now, the next question is: here's the next biggest resistance. There's a 33,000 shares for there's 100 different orders out there. Now, then that's where the next resistance level is. So the goal is you hit a resistance. Where's the next resistance? The next resistance is the next biggest seller. So now we're coming up to him, and we're going to see what's going to happen when he gets to 29.
Yeah, it happens so fast.
Well, also, this is about a 5-minute video that I was able to capture when we traded this stock, and I kind of speeded it up over about a minute, so it doesn't move as quickly. Boom, we hit 29, the guy got taken out again, and look at the stock just took off again. And the thing I want to explain to you, Jill, is that, and your listeners have to understand, is that when you have a big seller out there and that guy gets taken out, that is a very big demand. Someone says, oh, wow, I'll take that 30,000 shares, and that's why you get the stock that really, really starts to take off. Now, the next thing is that you're going to get some resistance levels. It's going to start backing off. There's always profit taking going on, right? Of course. So when you have profit taking going on, you could see profit taking going on. But the question is it really a profit taking, or is it just people or is it really going to go lower? In this case, it's not. Seller got done. Remember, we just watched the stock go from 28 to 29. Now look at it. We're at 29.50 already. Stock just keeps going higher and higher because those sellers are getting executed. As those sellers get executed, that means there's a demand for it. When you see big block orders out there, it makes a bigger demand, and that makes it higher. Now, the next resistance level, obviously, is going to be where we have to focus on where the next biggest orders are. So we got some, I think we freeze, right? We're done?
Nope,
Almost.
we have a little bit more to go here.
We slow down over here. Yep, we're done. Oh. So the next video we're going to show.
You can actually go to our slide here. So this is where you're looking at those levels.
Right. So we're looking at the seller. So we have a 67,000 share seller at 28. So now we have to look what we call iceberg orders.
What does that mean?
Okay. So it's a funny story. So I came up with this word about 20 years ago after watching the movie The Titanic. Okay, if you go watch that movie, very sad movie. I definitely recommend it. So anyway, what happened to Titanic? It hit an iceberg, and the thing is, everybody was focused on the pretty of the ship and above the water. They didn't realize it's not what's above the water; it's at the bottom of the water. Icebergs are really big, so what happened? It crashed and it sunk. So what we're looking for is big iceberg orders, which we call, some people call them big block orders, but when you see a big order, it's called an iceberg order. So now we're looking at a 2890, and we're looking for a resistance. Once again, stock's going higher. We need to focus on the next resistance level.
All right, which is on the next chart here. If we take a look, yep.
So here's just a quick little screenshot. So as we're looking at it, you see, it's a lot easier when you're focusing on, when you're just looking at the level, the total view, and it's easy to point it out. Now, please keep in mind, your listeners have to understand, we're fast forwarding this pretty quickly to get to the point. It doesn't move this quickly. But I'm showing right here is just a quick screenshot. What we're focusing on is this big order right here for 73,000 shares, and there's 315 different orders out there making up that 73,000. Now, the thing I just want to point out is, I just want to teach everyone a quick little lesson.
Yeah.
Don't ever sell anything at $30. Go out at $29.99. You just cut the line by.
So that's for anything that's like an even number.
Biggest trick I was taught by my mentors when I was younger. Listen, everybody's going to think 30. Everybody's going to think 20. Go out $21.99. You just cut the line by 73,000 shares. That's a very good.
It's like selling a house or buying a house. It's like that, those incremental psychological levels.
Well, if you remember, if you look at it, the stock has a penny intervals. And so that's a little tip. But the thing is, let's focus on what happens to the 30. You know, just right off the bat, you know that's a major resistance levels, and that's what we have to focus on. That's for the stock to go any higher, it's got to get through that 73,000 share seller on total view.
All right, well, let's take a look at that next side. See what happens next. Now we're going to get the other piece of the trade.
Okay, so here we're looking at the stock moving. Here's 29.45, 29.48, 62. 67. So the sellers are getting executed. You can see the transactions taking place, but we know that there's that guy sitting right here. And now his order's coming up. Look, he's starting making up the ranking. It's getting up to 30. It's getting close to him. So let's watch what happens. 74, 70. Look at the transactions taking place. It's trying to get there. And by the way, those orders, they're all real. People think like they're fake. Those are real orders. Can a guy cancel it? Of course they can cancel it. But that you have to take very seriously, and that's a real order out there. So now as we're looking at it, and as it's trading, it's trying to get there. Actually, it kind of almost tested it. You see that right there?
Yep.
See that candle right there? It's hit it, and now it's starting to back off a little. Now you're starting to see the red candlesticks. So now it means that the last sale is lower than the previous.
And this works for all kinds of stocks. ETFs, would it work for ETFs also?
ETFs, futures, options, it works the same way. Remember, it's the movement of the stock that makes all those other things. Yes,
right.
ETFs and everything else. You could look up any ETF and it'll come up on total view. Look, now we're down to 29.
Yep.
So my point that I'm getting to is this. If you didn't have a game plan, Jill, and didn't know that seller was out there, and you try to
And actually, if we go to the next slide, this is exactly what you were talking about. There's your level right there.
If you didn't have a game plan and knew that seller was out there, and look at that candle, that stock literally moved. Look how fast it moved in that one bar chart. If you didn't have a game plan to get out there before that guy was out there, and if you didn't what we call shaving, if you didn't shave just before that 30 and cut that line, guess what? You would just look how much money you would have lost. That stock didn't even drop from 30. Look where it went to. 27.30. You would have got crushed on that trade. Because what happens, if that seller's out there and he's not getting executed, he really had to sell that order, Jill. How is he going to get out? He's got to sell to the buyers. If he hits the bid, he's running that stock down, not you and I. Remember, we're not trading 74,000. Someone else is, and it's not one person. We saw it. It was like there was several people out there doing it. And that's how you got to focus on using the total view when you trade in today's volatile markets.
All right. So cool to actually watch it happen in real time. Thanks so much for doing that for us, Fausto. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.